Okay. Any question you people have till they are coming? Or okay, you have taught me that. What? First I do this, and then I'll be just doing that, right? No. Okay. ये कर दिया लेकिन कहाँ हो रहा है तुम्हारा? नहीं, कहाँ हो रहा है? हाँ, तो ये तो थोड़ा टाइम लेना है. हाँ ठीक है, यहाँ से ना. हाँ वो तो ठीक है, लेकिन मतलब जब और रुको ना, इन्होंने मुझे ये सिखाया था ना, that would be better. No, I think to go further, this has to be used. Yes, that is better, right? Yeah. हाँ हाँ, capital formation, yes, exactly. Government का main जो government करता है, government capital formation, yes, that is decreasing by the government. That has decreased in the recent year. अब वो recent year में decrease हो गया है, तो एक cause of concern है actually right now. Okay, all right. Well, look, we have left the farmer as everybody has left them, right? in between. So we'll pick him. Again, we'll come to the other story, forward feature option. Look, before we started, so we have talked about what is derivative, right? From where it is deriving the value. Now, look, these things are the types of derivative. It will be like instrument, derivative instrument. For example, we had share, debenture, that was the instrument of the capital market. For money market instrument, we have a CD, capital commercial paper, CP, these were the money market instrument. When you talk about instrument, what was actually, that was just a piece of paper, an agreement between two parties, isn't it? That was the case. Capital market instrument has the share bond, that is the agreement between two parties. Money market instrument, CD, etc., that was agreement between two parties. It can be made more than two parties also. Similarly, these are the instruments, right? So these instruments will also be the agreement between two parties, right? So derivative, here when we say types of derivative, that derivative will be deriving the value from the instruments itself, means whatever the what do you call this agreement will be there. So all are the name of the agreement itself. So kind of paper, you can say demat form, right? That's the one thing to understand before we come to this. What is this forward future, how it functions, that we are going to learn. But these will be the agreement between those two parties, just like the other that we have seen. Fine. Coming to this, as I told you that these two will be dealing together at once. We'll understand both together, and then we'll come separately these two. So what is forward future? Well, coming back to this, that what we have seen, one is the farmer who is producing this potato, and another is the potato chips factory. So one is related to the primary sector producers, another thing. But you can see that there is a relation between these two, right? These chips factory required potato, continuous supply of this, and this farmer required someone who will buy it, his potato, right? Anyways, what he is thinking that this year I talked about, for example, suppose it's 2026, right? His potato, say for example 1 kg is priced 50 rupees per kg. I am taking hypothetical number, right? 50 rupees per kg is the price. So last year he sold the potato, say it around 55 rupees per kg or 60 rupees per kg. This year already price is bit down, say it is 50 rupees per kg, and he is assuming, by thinking as he is assuming that in future, right, in coming days, price might go down as well. Are you getting? That is what he is worried about. He thinks that the price may go down because already last year and this year, because production might be higher, as the farmer, he might have idea about it. So he might be thinking that there is a huge production of this year, etc. So might be the price will down. That's why he's a bit worried. So then he approaches this lady, owner of this potato factory. He said that, look, right now price is 1 rupees 50 or 50 rupees per kg, right? So if you agree to buy a certain price in coming days also, because suppose if he is thinking that in next year now the price will be only 30 rupees per kg, that is his imagination, right? In coming days it will be 30 rupees. That is what he's planning. His information is there, right? That is what his analysis of the market is. So he approaches to this lady, this owner of this factory chips, potato chips and ask her that, look, if we make a contract, right now as you can see price is of 50 rupees per kg, right? So it will remain 50 or something. So if we make a contract that in 2027 also, or whatever date, in future date, right now, maybe half of the 2026 or maybe 27, in future date also, if you buy from me only, right, then I will be giving you at 40 rupees per kg. Are you getting the story? Because he is saying, as you know, that price is 50 rupees, and she also knows that price is 50 rupees per kg, but he is saying that if you agree, have a contract between me and you, then in coming days also, next year also, you'll buy from me, I'll be giving you at 40 rupees per kg, right? Fine, she agrees. She says, okay, fine, I will be agree. Now the question is, why she agrees? Because her information is that the price might be higher. Now, because otherwise, if she also knows that the next year price will be 30 rupees, then she will not get it. Obviously, not agree. Obviously, that's the obvious thing. So her information, whatever sources it is, or assumption might be there, she is thinking price might get higher, she agreed, right? Then they sign a contract between these two, right? That in future date, in coming date, the price will be paid 40 rupees per kg to her. This sign will be done, right? This agreement is called forward, right? This is called forward derivative, all right? Forward derivative means the forward derivative forward derivatives talks about the agreement between two parties, right? But these two parties, okay, let me tell you one thing more here. Though first thing, you half of the thing you got it already, that what is forward agreement? This is the agreement between two parties, right? Agreement between two parties for the future price, for the future price of, for the future price, that is the agreement. But now where this agreement takes place, that comes the thing, the story, you got it, right? Now what happens, what if suppose next year come, what we have learned, 2026 is there, 50 rupees is price, next year agreement is 40 rupees there. Now the 2027 key, right? 2027 key. That could be two different scenarios. Scenario one we are taking, right? One could be there that the price of potato is not 40 rupees, at them that time price is 60 rupees per kg, more than this, right? That is price represented. Then this farmer might think that I am in loss, because agreement is there, right? That the price I will be paying at 40, and now the price is even higher from the last year, right? Because maybe cold storage got or whatever conditions could be there. So this farmer might be thinking that I am in loss. So he says to that lady that, look, we had the agreement, but I am not following it. As you can see that this is very very high price. So at least you adjust something. She said that no, I cannot adjust it because the agreement was there. Then he might leave this agreement. Are you getting? Question is that can he? Answer is yes. He can. He can violate it, or he can just stop the agreement. Or if she agrees, okay, fine, I will not give you 60. Come to the 50 or some agreement they do, that can also be done, right? So it can be stopped, it can be stopped by any party. Even suppose price will be, for example, 20 rupees only, then she might think that the price is, why I am paying 40 rupees, price is only for 20 rupees in the market. She will approach and say that I will not pay you 40 rupees. It means when this agreement is done, right, if any party, they feel that if they are in loss, they are not getting as much money or as that the market is paying, they can violate this agreement, they can come out of that agreement, or that can customized, they can customize it. Why they can do it? Because this agreement takes place on over the counter, over the counter. What over the counter means, that is the term in economics, OC, over the counter. It means that there is no stock exchange involved in it, no legality involved in it, just these two persons met and then they did the agreement. So because there is no stock exchange, there is no government involvement, there is no legal entities, they can violate, they can customize. Clear? So all these stories that we talked about, that was forward. I hope you all got it. All right. Now we'll come to the future.
Sir, in forward, during any point of time, someone will be at first person.
Not necessarily, but yes. Okay.
Why agreement with not?
Yeah. But look, the point is that, look, what happens, suppose generally these two parties when they come, right, any business is run on trust. Suppose that one person who violated, then the next time they will not do the agreement. So most probably that's why I told you it's a customized, and the word is can be. That's why they ask you, look, if you don't break the agreement, do some adjustment, we can customize it. And it can be customized because it is between two party only. There is no, there is no legality involved. There is no forcible laws are there. That is the weakness of it. That's why we have different rules now. Under this, that can be. Point is this, right? Under this, you can say why agreement. Obviously, if there is no agreement at all, then he has to set the price of that particular price itself, or that immediate price itself. She will be buying on that price itself. And obviously, there will be minor hand there in the price. Then they will not violate it. They will be ready to bear the loss. Someone will be able to, because they understand. Look, suppose I told you it's 2026, right? And that is from 2027. It might be for 28, they can do the agreement for 5 years, they can do the agreement for 6 years, right? It's not only 1 year, they can do that. So one person thinks that, okay, if I am facing the issue right now, this year, next year might I get profit. So they might not do it. Point is that obviously it is based on assumptions. Both are what I told you in the beginning. They are assuming or their information sources are there. By that they are thinking. Nobody can have exact information what could be the next year price. Obviously, na? Even share when you buy, whatever we have done, share you buy, do you know that the company will certainly make profit? You don't know that. You take a gamble. Similarly, the gamble is here, right? They do it. Fine? Well, now come to the future. A story remains same, right? Everything. This person needs, they are thinking the price will be fluctuating, etc., etc. And then they approach to this agreement will be signed. But this time, the future agreement will be in the listed stock exchange, not on the over the counter. So when the listed stock exchange will be there, right? Obviously, it will be legal, right? When the listed stock exchange will be there, then it will be legal. Means legally binding. When it is legally binding, obviously they cannot violate, right? They cannot customize either. They cannot customize it, right? So that is the main difference. In this, story is exactly same, but this is legally binding. This cannot be customized, and both party has to follow this, right? That is the future derivative. Right? One more thing, in forward derivative there is no collateral is taken. In the future there could be some collateral, could be, not necessarily that okay, if you are agreeing it, then give me this much amount itself. I hope you got the difference between forward and future, right? Okay. So let's okay. I have that table also. Fortunately, so everything that we discuss, it is given in you. First is same, right? But this is not legally binding. It is legally binding. It is over the counter. It is organized stock exchange, not over the counter. Collateral is not required in this. In this might be, right, some initial margin required. Chances of default where? Obviously, there is no doubt about it. That is, but there is no chance of default as the legal one. Self-regulated, as you can see, the two parties, they are regulating it themselves, but it is by the stock exchange regulation as there. And it can be customized, but it cannot be customized. Everything that we have discussed is only in the table. All right, that's it. So now the next one. Okay, there are some news, current news also. So see that news related it. Though this news is running for last 2 years actually, but again they have extended the ban. That's why so as you can see, SEBI extended tradings in 7 commodity until March 2026. Right. So March 2020 they have extended the ban. What is this actually? The ban is talking about. Look, first read the news. News says, right, SEBI has banned the derivative trade of 7 agricultural commodity on the future platform. Right. About this stock exchange we will study a little bit later. On the future platform, not forward, because stock exchange will not be on the forward. Forward is customized among themselves. So on future, SEBI has banned 7 commodities. They have banned in 2024 itself. Then it was extended to 2025. Then it is extended to 2027. And these are the 7 commodities on which they have banned. Right. They have banned. What does it mean? What you need to remember, though, you can ask me, do I need to remember these names? Right. I will say yes. Right. Why I will say yes? That because you just give it. Suppose that if they ask you, UPSC is known for that. Sometimes they put it. One is that, look, if they ask you, so they can ask you either concept or they can ask you either fact. What could be the concept? They can ask you that one thing, what is this derivative? Right? What do you understand by this? That could be there. Another could be that, okay, SEBI has banned the future derivative on 7 commodities. What will be the impact on this? That could be the concept. That we have not studied yet. We will talk about it. What could be the impact? This would be the conceptual question. But they can also say that which of the following is banned by the SEBI, right? That is obvious. So then, because it is not 50 or 60 names, only 5, 7 that you can pick in your mind, right? Because you should not be missing each other, and then it's not difficult. So now we eat every day, right? Like you eat non-basmati, soybean. What is the meaning of soybean and its derivative? because there's not only soybean and its derivative. It means soybean and whatever is made from the soybean, like soybean oil, soybean whatever, like no, that is the meaning. Mustard seed and its derivative, same thing, seed and whatever you make out of it, that is crude palm oil and more. So these 7 commodities they have banned. Why they banned it? If I ask you why they are compelled to ban? Though I have already written here the curve inflation, but how it will lead to inflation? Future trading, first what is the meaning of this? 7 commodities are being on the future trading. Same thing, potato, you replace potato with chana, right? The chana is banned, na? Same thing is there. There are 2 party 1, party 2, they are having agreement. They are doing agreement, na? In future, I will be paying you this much money, right? How do you know that will be this much money? Suppose that, see these products, all are day-to-day life products. Take example of wheat. Wheat, is being, our paddy, especially non-basmati, is being eaten in India, every part of the country, and a lot, everyday life. Now suppose there are 2 persons, right? One party, there are 2 party agreement are there, and those both of them do agreement that in future, in next year or day after next year, right? I will be paying you 60 rupees per kg, because he has the information that next year price will be rising, right? We talked about, no, one person think price will rise, one person think. So he thinks that price will be rising next year. Next year might be 80 rupees per kg, 100 rupees per kg, right? So he say that, okay, do the agreement, I will pay you 60 rupees. Right now even only 40 rupees per kg are there, but next year I will pay you 60 rupees per kg. He say, okay, fine. He will get agree, because you understand that only 40 rupees price, he will make 60 rupees. So both do agreement. Now next year when it comes and the price, suppose if it does not rise, his assumption was that it was rise, but if it does not rise, then he will be in the loss. So to compensate that loss, what he will do? He will do the hoarding, right? He will do the hoarding. He say there is no basmati rice, no paddy, or no wheat outside the country. He will try to inflate artificially so that he can manage. So naturally there is no inflation, but unnecessarily inflation will be in the economy, because both parties have done the agreement and the one want to compensate that. Are you getting the point, right? So anyways, so that is why government has banned, because these are the daily life product and that we use, and it can create artificial inflation in the economy. You remember the fact, obviously, recently, what is this derivative? Then the SEBI has banned it for the 7, even if you remember 7 commodity that might do. And why it is being banned? Because it can create artificial inflation in the economy. It has the tendency to create that. All right. Okay. So we have done 2 types, forward and future. Done. Coming to this, call option contract. What is this option contract, right? So look, it has 2 types, call option and put option. In this, again, for examination purpose, the mug-up thing will be only 1 line. But I'll give you the one shorter stories to understand. What mug-up thing will be, you remember, it is the right to buy, and this is right to sell. Right to buy and right to sell, right? That's the only thing. Now, right to buy means you have the right to buy and you have the right to sell. That is the meaning, only. But what is right to buy, what is right to sell? So we'll see some interesting stories to make it further easy. Silver price is going on. That is about the derivative, you can say that. Of course, that happens in the economy most of the time. Anything that you think in future price will rise, obviously you try to, that is what in share, debenture, in the entire market, that goes. It depends on your prediction, those who understand well and all that, right? And that is why some people say, those astrologers, if they know it, why they don't do that. Coming to this call option first, we have 2, call and put option, right? Right to buy, what does it mean by right to buy? Suppose that you all friend groups, right? You people as a group, as you guys, there are 1 friend group are there. You people planning that, okay, in coming winter season or whatever, right? You are planning to go visit Simla or Kashmir at one place. So you all group together, you want to visit. Say it on the 1st January, right? You want to go there, and you know that at that time the too much crowd is there, and hotel price will be very, very high. So right now you are checking the price of the hotel. What is the price of the hotel over there? You see, obviously right now price is very less, because you are booking it for 6 months prior to it, right? 8 months prior. So prices are, even good hotels price are very, very less. So you are trying to book it. So now what you do? Suppose you go to the application, any of the application where you book the hotel, and suppose if the hotel price is right now, say that the 5,000 rupees per day, that is the price, and you find, okay, this is very good hotel, very costly hotel, but it is available only on 5 days. So you all say, okay, distribute something, we'll book it right now. But you can say this is day-to-day life, it might happen. But right now if you book it, the hotel say that if you are booking it, you don't have to pay entire 5,000, you just pay some amount, advance that you pay in advance. Say that advance they are asking you only 500 rupees. So they tell you that you pay 500 rupees, right, and you can book this hotel. Fine, you did that, you booked it. Now 31st come, right, December, and then at that place that much crowd came, right? No, they are the even this same hotel, like that happened in Sri Lanka India Pakistan match, right? The same hotel, suppose that is being sold in 50,000 60,000 rupees per day, because that was good hotel. Now you can see hotel are in loss, but you got that hotel in only 5,000 rupees, right? So if you can, what is this? Can hotel deny you that no, look, this is 60,000 rupees, how can my next room I have given in 80,000 rupees? But can they deny? Answer is no. Because you have, what you have used? Call option, that you have a right to buy. I told you na, right to buy at the same price, right? So you have the right to buy under this option, because the option you have find it that in future I will be buying this, in future I will be buying. Right now I am not buying it. I'm now put this story into the share debenture, right? You are buying the share of a company. Right now you are just giving some advance amount. You say that okay, I will be buying your share, but I will be buying next year or 6 months back. Right now I don't have money, and I will be paying you 1,000 rupees for that share, and take this 5 rupees as advance, for example. At that time, even if the price of that share will be 10,000 rupees, they will be giving you at 1,000 only, because you have already bought the call option, you used it. Did you get it? So another things in this hotel cannot deny. Now suppose take another hypothetical situation. I'll give you example of Simla, or say it Malani. 1 year back, just 1 or 2 years back, there was devastative rain over there. Even those who went there, they could not come back home even 2 months. That was very, very bad situation. Suppose if that happens, nobody is going there, the hotel price is even just 1,000 rupees, right? And you have already agreed that you will be paying 5,000 rupees, and you don't want to go there, right? Can hotel force you? No, you have to pay me 500. Answer is no. You don't have any obligation. You can, but what will be your loss then? Only this 500 rupees advance, that you cannot ask them to pay it back. So point is, this is the reservation price that you have to give it. Rest, it is your right and nobody can deny in buying sales. That is called the call option. This done. The story remains same, but you need to remember only that this is right to buy. What is right to buy? Entire thing. Share, you just remove this hotel, etc. Now coming to the put option, right? What is this put option? That what I told, this is the right to sell, right? Right to sell. Now in this, I'm just taking the share example itself, because every time you do not need to go to the you have got the background, now you don't need. What is right to sell in this case? Is suppose you say to someone, you are the one who has the share, you say that I will be selling you the share after 1 year, say it in 100 rupees, right? 100 rupees I will be selling. You agreed that okay, fine, I will be buying your share after 1 year in 100 rupees. Are you getting? What I am selling my share, suppose this is my share, after one year, how much money you will be paying to me? 100 rupees. And you signed this, agreement is done. But after 1 year, the price of this is only 30 rupees. Are you getting? But still you have to pay me this much. So this is my right to sell. You cannot say, no, I will not buy it now. So at that time, you have a right to sell. So same apply the same. Or all things, share, bond, derivatives, that is the meaning of derivatives, a contract. That's it, nothing more, right? And if you understood entire derivative, entire call option, right option. Fine, that's it. Now come to the next. Swap. There are 3 different types. We will see swap. Look, one more topic is there in which we will be studying currency swap, but that is different. Like dollar swap with Indian rupees, right? Dollar rupee swap. And the rupee dollar swap and dollar rupee swap has differences. That is another thing. The swap word will be there also, but the concept is different. Here it is different, right? Though the word is currency swap, commodity swap. So currency swap is here, but this currency swap is different than the currency swap we'll study in different topic, right? Sometimes it happens that the word matches, concept are different. I think in 2017 probably, if I don't remember, if I remember correctly, but maybe 17, 18 or so, UPSC has asked one question from the Indradhanush scheme of the government, right? Indradhanush scheme, one scheme of Indradhanush is related to the banking also, right? Indradhanush has 7 colors of it, like the 7 initiative taken by the government at that time itself. I have put it that in your handout because I did not find it relevant right now. That's why I did not teach you. But it's a simple one. 7 different things to done for the improvement of the banking. That was in the Dhanush. It was for the banking. There is another scheme of the government with the same name in the Dhanush. That is for the malnutrition, means for the people to improvement in the poor people. Same name, right? Even they did not change the name of that same scheme. Name of the scheme is same. Now suppose as a student, if you are studying Indradhanush scheme, you think you have studied it one Indradhanush, you know, okay, you have done with the Indradhanush. Now even if you see some places in Indradhanush, you think you know, so you don't update your note. In the examination it comes, and both options were there related almost, right? One is related to the finance, one is related to the social sector initiative. So what point I'm trying to do, sometimes name can confuse, it might have two different things as well. Coming to this swap interest rate, so first we will do interest rate. Before we come to the interest rate, understand the meaning of swap. Swap simply means in general swapping one thing for others, right? I give you my pen, you give me yours. But it means I give you my notes, you give me yours. Generally, some students take different coachings. They give their notes, they exchange it. That is swap. You are doing swap from. Come to the interest rate swap. What is this interest rate swap? Look, suppose yesterday I think we talked about one fixed interest rate and floating interest rate, right? So what is fixed interest rate? That will remain fixed for the certain period for whatever loan you have taken. Floating will keep changing according to the RBI interest rate change. That was floating interest rate, right? Similar change is here, but in the international market or in this market, that EBR that we have studied yesterday, external benchmark rate, that does not apply. Here it is MIBOR and LIBOR, right? MIBOR and LIBOR. What is the meaning of it? MIBOR is Mumbai Interbank Offer Rate. That is the full form. Mumbai Interbank Offer Rate. This is London Interbank Offer Rate, right? Only I'll explain you a little bit here. That will do your job. Then we'll come to the currency swap. So look, what is Mumbai Interbank Offer Rate? Because we have a study interbank right now. We have a study that suppose one bank want to take loan from the State Bank of India, want to take. That is the interbank loan, right? So Mumbai here, Mumbai just represent country, not India. Like Mumbai Stock Exchange, it is not only for Mumbai, for the whole country and internationally also. Here Mumbai representing our country, right? Interbank means among the bank, and offer rate means that at which interest rate the loan is being offered, right? For example, suppose they are State Bank of India wants loan from the SDFC, right? SDFC is there. Then PNB means that obviously they have several banks in the country, right? ICICI, ABC, any bank. There are several banks are there in the country. SBI wants loan under money market. We have learned it. They are going to one bank. PNB is saying I will take 5%. SDFC is saying I will take 4.45%. Right? Different banks are offering different rate. Obviously, then the average will be taken. I am not going into the exact detail, but how this average is decided, the top and the bottom is being eliminated. Highest charge and the lowest charge eliminate, and then the rest they take the average, that becomes the offer rate, right? It means what is the offer rate in the market? We talked about at that time, the market determined how it is being determined. One is the highest, one is lowest, you remove, and whatever is in between, you take the average. Are you getting, you people? Yes or no? Focus karo, so you will forget. So now what is the offer rate here? How the offer rate will be decided? Whatever the interest, they all are asking, remove top and bottom, in between take the average. So that is the Mumbai offer bank interest rate. Obviously it will keep changing, isn't it? It will keep changing because right now the offer is some different, tomorrow might be offered different, right? So that happens in the country. And here London story remains just same. London represents the world. Now this is actually being left by the most of the country. India has also asked the Indian stocks that you leave the board, and the different they are coming. Anyways, London interbank offer rate means internationally also you are taking money, then rate is being decided. Now coming to this interest rate swap. What happens in this swap? For example, suppose one person, say you have taken loan from a State Bank of India, right? And you have to pay, for example, 5% interest rate. And that is your fixed interest rate. It is fixed interest rate, right? 5% is fixed. Every year, say you have taken 1 crore rupees for 5% you have to give every year, 5 lakh rupees you are giving loan. But Mr. B, he has also taken 1 crore loan from the same bank, State Bank of India, but he has taken floating interest rate, right? His loan is floating. So that will keep changing according to the repo rate change. All right. And right now, say his floating is also 5% only. Just take a hypothetical number. So this year, you both will pay the same interest. Even your fixed, you are paying 5 lakh. His floating, he is also paying 5 lakh. How much money you will be paying next year? 5 lakh only. Remember, because your interest rate is fixed. You will keep paying 5 lakh every year, right? But his interest rate will keep changing. This year it was 5. Next year it might be 4. Next year it might be 6. Suppose when next year it went 4, now you are becoming greedy. You think that, look, for the same bank, same amount, I am paying 5 lakh and he is paying only 4 lakh interest. Don't you think, do you think, no, I should have taken the floating, right? Suppose next year when it becomes 6 of this, then he is thinking that, look, I am paying 6 and he is paying 5 only. Are you getting the point, right? So in a way, both are thinking something. Then they do the economics calculation. If they understand market, what could be the reason? For example, when you RBI governor came, the assumptions were there, he'll be lowering the interest rate, right? So obviously most of the people at that time, they were taking the floating interest rate. They were thinking that the interest rate will certainly go low because several years they have not done it, right? So when you do that, now you both have different assumptions, just like this forward and future. We talked about one person thinking differently. Then you say that A say to B, you take my interest rate, I will take your interest rate, right? And then we pay, means I will be paying your interest, you pay my interest rate. That is called interest rate swap. Did you get it? Right. Now you can say that when you take my interest, means obviously the account will be the same, but interest you will be paying instead me, right? So you are the one who will be paying. Obviously there will be some, the third party can be attached into that if they are taking some charges into this. If they don't know each other, that will be coming under the currency swap. But right now you understand 2% only, right? Is it clear to you? What is currency swap? If I ask you, if you got it, then tell me. Sorry, interest rate swap. In this, in general, what you call? In simple one line. When the two party, right, party A or party B. And look, when we talked about share or bond, government securities, and then we have talked about the interest rate on that, right? So when you are buying bond, there could be the fixed interest rate, inflation index bond could be there. Then it could be the convertible bond, isn't it, right? So similarly, there are different derivatives on that. There could be floating interest rate, fixed interest rate. We have talked about in the money market, when call money market, in the term money market, it could be different. So similarly, in this market, when the two party are taking something, some loan, either the bond they are buying, different things they are buying, then this can happen because now they are talking about future, what could be the future rate, and then they try to swap. If they do an agreement that now I will be paying your interest rate, you will be paying my interest. That is what interest swap. That's it. Done? Clear? Now I'll be coming to the commodity swap. I hope there is no doubt in this, right? क्या तुम सोच में क्या पड़े? Those party who is buying, obviously look, there are two parties who are interested in this. First, that's why you know what is derivative market. Derivative market includes this bond, share, government securities that is being bought, money market instrument that we talked about, sorry, capital market instrument, all the instrument. So obviously there are two parties. Obviously any party who is engaged in this, if they think that that need to be exchanged, then they exchange it. And undoubtedly, though two different things they are paying, suppose someone has taken more money, right? Then they will not do. They say, obviously, it will be somehow similar, right? They have to pay same interest rate. Two entire different things, how they will exchange. They'll exchange only when there's some similarity. Like we have a student substitute goods we talked about. Similarly, substitution will be there.
So what is the purpose?
Purpose, look, what was the purpose of that potato chips? Fixing the price. Because you assume future profit. The purpose is assuming future profit, and both want to maximize their profit, right? It is just like what is the purpose of buying share itself? Right? You take a gamble. Remember one thing: these are all legal gambling in a way, right? You take a risk, right? And you take a risk on the basis of your calculation, your understanding about the market, etc. You too.
So both of them must be different interest calculations. One will be floating and other should be fixed.
It could be both should be look if the point is that suppose if they both are fixed, right, then why they will do that, and both have different interest rate, then not do. Remember one thing, that as I told you, both are looking for their own profit. Both are looking for it. They have their own understanding. Same, think about when someone is buying share, right? Someone who is selling the share, they might have different information, na? If they understand, oh, tomorrow this share will be such high, become the billionaire, then he will sell it. He will not sell it, right? But it happens sometimes the share becomes high. You might have seen several news that one person who was the watchman of that company, he became Amazon. People all called now. He was the Amazon. He invested few dollars in that. He was just sitting out, and now he is a billionaire, right? So at that time he did not understood na, that the similar thing is there. He did not know, right? But he become. So this is a kind of risk that you take. But think about it. Even that dollar that he has given to me, that was very big amount for that watchman at that time. But still he took the risk. He thought, okay, let it give, give, and then he becomes. It was as simple as that. Point is, in the market, just because we are talking about what we are talking about, capital market. What is our chapter? Capital market, in which we are studying this share, right? Share market, this derivative market, right? So in this is happening, and this is happening. A lot more different things are there, but we are sticking only to the UPSC point of view. That what is the terminology means. That's it, right? You keep that in mind. Only what this terminology means. If that is complete. Suppose 2-3 factual question can come from this, right? Now, this is the which derivative, which of the suppose they ask you this interest rate swap. This comes under which instrument, right? The capital money market or capital market or money market. First, capital market. Is it the bond or the share? No, both of is not. It's not a bond. It's not share. What is this? This is the derivative instrument, right? So there is a word difference is now. Bond is different, share is different, derivatives are different. Similarly, so one part, that is the part of the derivative. In that derivative, we have the call option derivative, forward derivative. They have different names. And in that forward, the only picked line is 4-5. That's it, right? We are talking about to make you understand. That's it. Only 4-5 line you keep in mind. That will do your job. Commodity swap. We are coming to it. We'll finish it very soon. What is this commodity swap? In this, remember one thing. The name is the commodity swap, but commodity itself is not being swapped, right? Only again, just like this potato that we have seen, only again like a assumptions of future price will be there, right? Take the potato itself. But in this, there are one third party again. Look, as I told you earlier, in every word there will be minor differences. Rest story remains same. So if you understood first story, it will be almost similar. Just one thing need to be added into that. Now think this is the potato chips lady again, right? So she has a potato chips factory. She required continuous supply of potato, isn't it? Then only she can make chips. And you can see right now 60 rupees per kg is the potato. It is there. But as she is running the factory for, leave the late, right? As she is running this factory for last several years, right? She knows that sometimes some year price goes up, price goes high, right? Even in 1 year itself, few month price is very high, few month price is very low. But she needs continuous supply every month, every day. But suppose that today price is 60, tomorrow price is 70, right? Next day price is 65. Can she change this price of this packet every day? She cannot. If she does that, then she will loot the market. People will not buying it. Yesterday was the price, today is the price. She cannot do that. She has to keep constant price because of the market way functioning. But this potato price is changing. Food inflation we have talked already volatile. So it's volatile. That disturbed her business, right? So she is looking for some kind of benefit or to fix this. She approached to our best bank, State Bank of India. Went to the State Bank. She said that look, most of the time the price is say 60 rupees per kg, right? Sometimes it fluctuates, sometimes it's less. So have an agreement. What agreement would be there? Bank says that look, if whatever price we both fix, say price fixing is 60 rupees itself. So price is 60 rupees fixed. If price is going higher than 60, any year, any time, that price will be paid by whom? Bank. Means if it becomes 70, it becomes 80, it becomes 61, whatever, extra price, whatever that will be, who will pay is bank will pay. But if price goes from 60 to 40, right, bank will still take 60 from her. Are you getting? Then the bank will make 20 profit out of it. If price will be rising, bank are in loss. If price is going low, the C is in loss. Incentive is that if price goes low, you think about it, if you know for sure that price will not go low, then you will not come in the agreement itself, right? If anyone, suppose two parties doing agreement and you know that I am going to lose every time, you do that? Suppose you play any gambling, you know that you will lose it for sure every time, then you will not go there. When you bet, you know that you might win, you might lose, right? That's the thing. So when bank is coming, bank cannot be always in the loss and always in the profit. Suppose if it is for 5 years and sometimes price is rising, the bank will pay the difference. But if price is going low, see what she wants. She wants a stable price. So she got that. She got a stable price. She has to pay 60 rupees. If price goes low, obviously she has to bear the loss. For that, she has to be ready, right? No. But if price goes high, still she does not need to worry about because bank will pay it, right? So that is the commodity swap. All right. So in this commodity swap, what is happening? The written thing I think I might have given you in the handout that I will be giving you, right? Here I have written or not now. Okay, no problem. Understanding important written is that only. Commodity swap simply is what happening. There are two party which is having, but in this there is one commodity is involved. See that, right? Commodities involved. So if they want a stable price, they approach the bank. In this, there are third parties. If the price will rise, third party will pay that price. They don't have to bear. If price will go, still they have to pay that much price. So one get stability, right? One get fixed in price, and one get fluctuated price. So that is the case. The last one will be coming. The written thing I'll be giving you. Don't worry. Giving you, I'm giving you every day for the last 4 days. So getting is your job. Try to get that. Coming to this, what was the last one? The currency swap, right? This is the currency swap. Now we have done the interest rate swap, we have done the commodity swap, the last one is currency swap. Take the one example that we have studied earlier. Is suppose if you have a business in different countries as well, right? You have different countries business, and you want some expansion in that country as well. Obviously, you need money. Yesterday we talked about the PNB letter of undertaking, etc., etc. So suppose, as you can see, I have taken some example of these two bigger companies in the world. One is Reliance, another is Apple. Apple is US based company, Reliance is Indian based company, mainly their headquarters is there. Now suppose Apple wants to come India. They want to establish factory here in India, in Bangalore, in Mumbai. They want to establish factory here. Obviously, when they want to establish factory here, they need money, right? They need cash, and for that they'll approach the bank, right? So when they need cash, what are the options they have? Yesterday we talked. Either they come, take money from their own country and come here, so they will get less interest rate there, but then the exchange rate will be involved, and that will be very costly, right? So second option, what they have? They approach the State Bank of India and they ask them, give me money, right? Say that the $100,000 or whatever, give me money. Say it 1 crore. I am taking a smaller number to understand. Give me 1 crore. SBI will say that I'll charge you, 10% interest rate, right? Because you are foreigner company, I'll charge you very high. As you can see, even foreign visitor has the highest, so I'll charge you 10%. He said, no, in my country I'm getting only a 6%. You are charging 10%. He said, that is what I charge. Okay, fine. At the same time, Reliance also want to establish its factory in US, inside US, right? The same thing, same problem will be for Reliance. Reliance is going to the Bank of America. Bank of America is saying that I'll give you 1 crore, but I'll charge you 10% interest, right? So both are facing some issues. Though nobody knows each other. Here we are talking about Reliance and all. There will be one third party in this, in between, mediator. He knows that both party has issues. They are facing this. So they they ask them to come together. Apple asks the Reliance that you take money from State Bank of India and give it to me. Are you getting? Because you will get only 6% interest. So you take money from State Bank of India and give it to me, right? I will take dollar from the Bank of America and give it to you. Because I am getting 6% interest here, you are also getting 6% interest here. So both will be in benefit. You will get the dollar at the cheaper interest rate. I will get the rupee at the cheaper interest rate. So currency swap. I am giving you dollar, you give me rupee, right? Interest rate, we both will pay the same. I will give you your interest, you give my interest. Did you get it? In this, why it is not interest rate swap but currency swap? Because the two different currencies are being swapped in this case, right? One is giving dollar, another is giving that. In this, that much will be enough for your examination. But I'm not going, as I told you, there are third mediator here. They will charge something, because look, here I have given example of one company. But there are several companies that is being opened in the several part of the world. Several companies are coming in India. Who knows who required money, what is percentage is happening, right? Obviously nobody knows that. So there are some mediators, their job is that one. They keep tracking what is happening, what is there, and then they try to make them together to fix this. And when they do that, they charge some commission. Obviously, so some commission will go there. So leave those part actually. You don't require that. Technically, you just understand what is currency swaps. In this, one company that is going to another company, they require the currency of that country. Similarly, at the same time, some other countries company are coming in your country, they are required the same currency, and then the currency is being swapped. That is currency swap, right? This is another derivative. So we have done the, I think, derivative part, right? Derivative we have finished. So we have finished the derivative entirely, right? Means you can say almost money market itself, money market and the capital market. Means financial market we have almost finished. Some factual things we'll see only now. These are factual things only. So money market, then the capital market, then the instrument of money market, instrument of capital market, everything we have done, right? Our financial market topic is finished. Linked topic will be there, linked like the dollar, etc. That we will do tomorrow, remember, because everything is linked. But the major tools we have. Few factual things, stock exchange in India right now. What are stock exchange? You people might be knowing it already. Stock exchange, in this, the companies are listed, and there will be those companies who is not listed in the stock exchange. Suppose if you are opening one company right now, right? One ABC Limited, and that company is not listed company, right? because you have not listed means that suppose if I want to buy the share of your company, how can I buy it, right? Because if your company is listed in Bombay Stock Exchange, then I will buy the share of your company from that itself. Otherwise, you have to go to the Shark Tank, right? Then you ask them, I am opening a company, you give me the money, they will ask you, then they will give. The stock exchange means that it's a orderly buying and selling of listed securities, right? Orderly means obviously in a proper order, listed securities are being bought and sold. That is the stock exchange. Facts are there, which is the fastest stock in the world, etc., etc. Leave that. That is, I don't think they'll ask you, but they'll ask you, then still you can. There are two major stock exchanges. Though there are several stock exchanges in our country. 4 or 5 is important. Those 4 or 5 we'll see. Two major. One is Bombay Stock Exchange. Another is the National Stock Exchange. These two are major. Bombay Stock Exchange is actually understand this is the Asia's first and the largest stock exchange also. Dalal Estate Mumbai, where is the address of that? This was also though 15-20 years back, but Dalal Estate is related to, that was your question, right? So, means even they can ask you that, don't think no, I'm very intellectual, they'll be asking difficult only. They can ask you, Dalal Estate related to the Bombay Stock Exchange, right? Among the top in the whole world, stock exchange, right? Then the National Stock Exchange, this is another stock exchange in our country, but this is smaller than the Bombay Stock Exchange, remember. The name is National Stock Exchange, but the major blue chip companies are with the Bombay Stock Exchange itself, right now. National Stock Exchange is smaller than the Bombay Stock Exchange. As I think this word I missed there, the index for the Bombay stock, here the index for National Stock is called Nifty. For Bombay Stock Exchange, it is not Nifty, it is called Sensex. That is sensitive index. So if they ask Sensex is related to, that is Bombay. Nifty is related to National. So that also you need to remember. Right now, there are few words also come. I find if there is a bull and bear, you might be see somewhere. So what is the meaning of that?
Bull is going upward.
Means that the share price or share market is booming. That is bull, and the bear means that the price is going. Or price means share market is going. That is the some basics are there. We'll be quick on this. Not yeah. These three. Apart from the major one, I have taken a little bit. Multi-commodity exchange. What is this multi-commodity? Look, we have the 7 that we talked about. Ban are there, but that is not in this. Remember one thing: when you talk about commodity, that commodity could be the agriculture commodity or non-agriculture commodity, right? Several non-agriculture products are there now that is being listed, that companies. So if the multi-commodity means non-agriculture products are there, for that we have a specific stock exchange, that is the multi-commodity stock exchange, that related to the commodity. But for the agriculture specific, we have a National Commodity and Derivative Exchange, only offer agri product for trading, remember. When we have learned that SEBI has banned 7 products, they have banned on this because that is listed here only, all 7 commodities, right? So for the specific agriculture product which stock deals, that is National Commodity and Derivative Exchange. And for all other commodity, that is the multi-commodity offer exchange. Only one line I have given you because that you don't require more than that. So don't put too much mind into it. If the question comes, that's fine. Does not come, doesn't matter. One line you remember. What is this? This is related to the agriculture. This is related to the other commodities market. That's it, right? What you need to remember about this? Look, this is the GIFT City is very much in the news right now. That opened in 2017 only. India's first international stock exchange. We did not have any international stock exchange yet. But this India's first, that is in the GIFT City, Gujarat, it has opened it. The India INX, the name they have given. Still, they have opened with a lot more ambition. It is not functioning as it was supposed to be, but it's a good thing to have it. Let's see how it progresses, right? Well, what next I have? Yeah, again, these 1-2 things is just factual. What is SEBI, right now? What SEBI does? SEBI is the regulatory body of this capital market, especially this stock exchange, etc. The function of the power of the SEBI. What is the meaning of quasi-legislative and quasi-judiciary? Can you tell me that? What is the meaning of that? It is the quasi-legislative and quasi-judiciary body. What does it mean?
It can pass laws to regulate the market.
Okay. Quasi-legislative and judiciary. Look, quasi means almost, not exactly. Quasi means that half, not half you say, almost. When you say legislative and the judicial, is making laws and giving judgment, right? It's not, SEBI is not there to make legislation. They cannot do that. but almost they can do. Quasi means that they can almost do. It means they will make the laws for these and they have to follow, right? That's why it is called quasi legislative. And quasi judiciary means all the action they take that they have to follow, right? That is why quasi judiciary. Remember, when they take a decisions, after that they have to go Supreme Court only. So that's why that was powerful in TTs in the country. Headquarters are in Bombay, etc., etc. It protects the interest of investor. That's obvious. Even if it will not be your option, you should be able to figure it out. No, what is the SEBI's job? This year also there were a question from the SEBI. The two questions was related to it right now, related to SEBI direct. One was BSSR, who maintained that, and an option that RBI maintained BSSR, but that is not the RBI, it is SEBI. Yeah. So sometimes they ask. One more question was related to. I'll see that. Headquarters. These are the things. Protect bank's account. Nothing must to be. You read it later on. I have given enough. Composition of SEBI board. Yeah, this you remember if they ask you. What is the composition of the board of the SEBI, right? So majorly 4 person in this, right? Major these 4. And then the chairman. Look here, though I have given you word nominated but also appointed. If the word come appointed, still by the central government, right? Appointed, nominate, obviously they themselves, and then appointed by the central government. 2 members from finance ministry in this. That you can see that why SEBI sometimes get 1 member from RBI and 1 is from the center. Again, that is nominated by. So you can see it is still dominated by the government, but still, and 5 other members, and all decisions are taken by SEBI. Do you know? Very recently, I want to finish it fast. That's why I want to. I think 6 months back something. The last SEBI director was one woman, a lady chairman. You might be knowing. And Butch, some Butch was there. Initially, she took several great decisions, and then she came in the news. There is one related things are there. I don't have that much time, and also I find this less important for this examination this year. Last year it was important, so last year I took economics. You have to mix up things. You need to leave something. But and she took such good decisions. She has given some prediction in the economy to stabilize the economy, right? Openly. Then she came. She was the first, I think, women chairman of the SEBI, right? She was the first women chairman. She was in the news very much that the great things she is doing, powerful, etc. And later on, one biggest corruption, her name came right now. All the reputation went in a second. So it is a very short. It is called very difficult things to manage. If you are in this, yes. Insider trading related she was. When she herself was engaged, it is said that she was leaking information, etc. Her own personality has some shares, etc. These are. Anyways, coming to this, so you can see somehow this is dominated by it. But remember these 4. The total member is 1, 2, 3, and 4. Total 9. So 5 members, and these are taking the decisions. They have the tribunal, the statutory body. They are decisions in order that can go to the Supreme Court. First, after SEBI, you can go to the appellate tribunal, and then can appeal to the Supreme Court, as I was telling. Appellate will always be there, but then external sector now will be starting, right? External sector means balance of payment. Any question you people have from the financial market? We have studied that, you can tell. All right then. What do you people understand by external sector? First, what do you understand by external sector? External simply means that anything that is coming from the outside of the country. External here means that, right? Internal means obviously. So when economy interact with other countries, and either it is coming or we are sending something, export import, as you said, that is external sector. So what are the things in that we'll see. In this, the main topic that we have is the balance of payment, BOP, right? Balance of payment, right? That we are going to see. Look, as the name is balance of payment, so there must be some payment that need to be balanced. So what are the payments that need to be balanced? Okay, look, whenever the residents of one country, right, suppose for example India, so residents of one country, they do some transactions with the other country, right? That payment means one payment is going out of your country and one payment is coming in your country, right? So that has to be systematically recorded. So in definition, it goes that it is a systematic record of the transaction of between residents of one country to another. The balance of payment means that. So what is systematic record? I'll explain it. You don't worry. Yeah? The first basic is that when the anyone from our country, anyone means even you. Suppose that someone who of your friends or family member living outside, they have sent you some dollar or euro from here. So some money you received. Suppose this is India and this is US, isn't it? So if someone has sent you some money, you received some money. For example, they sent you $1,000, right? So you received it. Transaction took place, and suppose that if you have sent some money to some other countries, so say that you have sent $500 to the US, right? Someone is living in US. So the transaction take place, inward transaction and outward transaction for you. For them, it was inward and that was outward. Now, this India and US transactions need to be systematically recorded. Who will record that? RBI. It is the job of the RBI to record all these transactions of the country, right? That has to be. Now, I have given you example of one person. There could be companies or any transaction that takes place, any investment that takes place that is coming in your country and the money that is going out. That need to be recorded. By whom? By Reserve Bank of India, right? They need to record. And how they will record? Why this dollar only? Because look, it is not only India and US. Money from India might be going to Nepal, might be going to Pakistan, might be going to UK, and all 194 countries, right? Or even 200 approximately. It is going and coming. So now if it will be different currencies, it will be quite difficult for RBI to maintain it, right? How much money came. So they convert it into the one particular currency, that is dollar. So that is why it is maintained in dollar only. Now how it will be maintained? Who gives the manual to maintain? That manual is given by IMF. IMF is International Monetary Fund, right? They mainly help the country in balance of payment itself, that we are studying right now. If there is balance of payment crisis, then the IMF help them. Not only, but majorly. So IMF gives this manual. Manual means the laws, the rules and regulation, how to maintain that. And every central bank of every country, they maintain this, right? Is it clear? Well, now these things you got it, I hope so. Now look, when the money is coming in your country, suppose inward, this is India, the money will be coming, suppose this 1,000 rupees came in your country, right? So India will write in plus. Inward transactions. Plus means you got it. The money is coming in your country. And whatever money is going, India will write in minus. Right? Same thing US will do. Whatever money will come, they will write at plus. And whatever is going, they will write at minus. So it means credit and debit. So credit is that what is coming in this case. So the credit is written at plus, and debit means whatever is going is written at as minus. Is it clear? Right. Now suppose in this case only two things if you see that. So what is India's balance of payment right now? $500 surplus, because our inward transaction was more and outward transaction was less. At the same time, what is the US? Minus 500 deficit. Okay. So India has plus 500, isn't it? Right. US has minus 500. Right. Now suppose if there are only two countries in the whole world, so what is the balance of payment of the world? Zero, isn't it? Because it is obvious that the total money that is not coming profit to you, the same is deducted from that other country, right? Is it clear, you know, all of you now? Yes, I hope so. So about this balance of payment definition, you need to understand this much only. Number one, what is this balance of payment? It is the systematic record of the transactions between the residents of one country to another. Resident, I have already defined you. What is resident? Who is the two major thing? One is that who is living more than 1 year in our country, and second, that whose economic interest lies in your country. Economic interest lies in the sense that suppose that someone who is doing business in this country, right? Their economic interest lies. Okay, it's not about individual. It can be companies also. Companies means, suppose if Reliance company, right, is in the US. And their company is not coming in within 1 year, isn't it? The company are living for more than 1 year. Then all the income they are generating, that is of that country. The answer is no, because who is the owner of that company? Mukesh Ambani, and Mukesh Ambani is the resident of what country? India. So that becomes the residence of India only in that company case, remember, because the company will be considered in that, not the as an individual. I hope you are getting my point. The profit that they will generate from here, that will study your current account. Further, you will get to know, right? But first, I want to make clear what is balance of payment. So all of you got it. International transaction between two resident of one country to another, and that has, if the money is coming, they write in plus, money is going, they write in minus, right? And that has to be reported in the dollar. Who maintain that? Central Bank of every country, in India RBI. Who gave them manual? That is IM, right? Now this balance of payment is two. One is the current account and capital account. I have made that, I think so. For okay, I have written these things. I did not. I thought I have not. So only whatever I told you, that's the only thing is written. I'll submit it. You will get that. Current account, capital account. From here, several questions was asked in the last 2 years. They have not asked last 2-3 years. So probability are there. They might ask you. So and this is easy. If you focus, it's not difficult one. It's easy one. Just you need to focus better. Current account and capital account. What is current account? What is capital account? So first we'll focus on current account. Then we'll come to the capital account, and forex we'll see little later. Right. So balance of payment comes under current and capital. Look. Current account in the sense what? As I told you, what is balance of payment? First, the transactions, isn't it? Of one country to another, right? That transactions must be taken place, and that some transactions could be the only money transaction, but could be export import also. Transactions taking place, we will convert it into the money, right? How much money it will become ultimately. But goods might be transported from one country to another. That is why export and import. So there are visible items that is coming and going, right, from one country to another, like you are sending this vegetables or any other product, that is visible items, the goods that is being transported from one country to another. And then there are invisible items are there. That is under service, income and transfer. I'll come to that little later of invisible. First talk about visible item. So suppose when your visible items, that is goods, that is being transported out, export and import of your country. If your goods import, means visible items import or export, suppose if your export of goods are higher than import of good, right, import of good, then what you call this? You call this surplus in balance of trade. There is terminology. Let me take a clean board to make you understand. There is term that is, and here differences. Look, there will be three things we'll be studying minimum. One is the current account, another is the capital account entirely. So CAD, current account deficit or current account surplus, another is the trade surplus, and then combinedly balance of payment, right? So you need to focus on that. If they ask you, you have current account surplus, does that mean you have balance of payment surplus? Answer is no, because balance of payment constitute everything. So if everything that is coming is higher than everything that is going, then only you have balance of payment surplus. So when you talk about current account surplus, it means we are talking about only this part. If you remember this table, you will never miss the examination question in exam. This is older BOP manual. New BOP manual is different. We will come to that also because it's still relevant. RBI is publishing this only, right? And if you understood this, the only few things is added into new. That's why we will do later. Only 1-2 portions. Rest remains same. That's why I have taken it to easy understanding. And keep, after going home, make this table 3-4 times. If you will be making it, if you remember this table, you will never miss question from BUP for sure, because they will not ask you outside of this. And if they are asking you, then you cannot even prepare that much as well. So cost benefit, you have to keep that in mind, right? Anyways, coming to this. So current account cannot be called entire BOP. Current account just a part of the BOP. And of that current account, visible item is just one part, right? So this is called trade balance, balance of trade. Let me write here, balance of trade. So balance of trade, whenever we talk about only visible items. Right, only visible item means we are talking about the goods export and import. It means it is about the export and import of goods. Export and import of goods. So suppose that if your import of good, first talk about that, if your import of good is more than export of good, export of good, what is the meaning of? trade surplus or trade deficit, right? That lead to trade deficit. And at the same time, if your export is good, that is trade surplus, right? So if your export of good is more than import of good, that is trade surplus, right? That is easy to understand. But remember here one thing, that is actually the if they ask you, whenever you see the word balance of trade, right, balance of trade, they are talking about goods only. If you can say that, look, only goods are not being traded, services are also being traded, but if they do that, then they write trade in services, they put this term over there. They do not write trade separately. When they just say that our balance of trade is negative, it means they are talking about goods. So this terminology, balance of trade, talks about goods only, visible items only. That's why only visible items. So terms trade, do not get confused services. If service will be, you can say service. Yes, we have it. We have even surplus in services. We are surplus in service trade, right? But then we write down the trade service, right? Or what is the position in services? We'll come to that. But whenever you see this word, balance of trade, they are talking about only visible items. You got the meaning of trade. Now what is the balance of trade? Now second thing is that then the some fact that our balance of trade is positive or negative, means are we importing more or exporting more? We are importing more. We have a negative balance of trade, right? Almost every year, because obviously goods import is higher than the goods export. We don't have any big things to, that is what in recent time there are several discussion on that. Even in parliament we had a discussion on that right now. When US started showing the world the power, etc., then do you have any single brand that everybody buy in the world? That is the issue. Leave about the scientific inventions, etc. No, after independence, you do not have any Nobel laureate in science. You got some economics, you got two in economics, right, in India. One is literature also, peace also, but you don't have a single science, no Nobel. Then you can say, oh, it's overrated, or that you can say, but still it is the most prestigious. Now, you don't have it. The problem is that even in this, the trade, you don't have a single brand, even in the clothes, shoes, any product you name it. That you don't have. Even those products that you are selling it, they ban it, right? No. Mangoes, we are proud of our India's mangoes. Even Dubai has banned few years back itself. And if you take 7-8 years back, Karnataka's mango was banned in US, right? For that, under trade will. Are you feeling stressed now? Okay. Yeah, break is needed. No doubt about that. This is a very long class. I can understand it. Though the second half will not be very longer, because we'll finish this capital account and the balance of payment, then we'll finish the class, because the new topic I'll add tomorrow, and I want you people to revise everything. Right now, I know that you people are getting right now, but when too much things are amalgamated into it, then one concept is clashing with others. It also happens, right? One concept is clashing. This is coming, that is coming. So go and revise that, and tomorrow we'll put some in the beginning itself. I'll put some questions. Generally we do in the middle, but tomorrow in the beginning itself, from today's class, we'll put some questions, all right, of this balance of payment, because probably I have not taken balance of payment question. There are several questions from balance of payment. Several means several in the last few years. All right. So current account deficit we talked. Any question you people have it? Yeah. Okay, fine. That it will be got once. Though sometimes you might see in the news right now that happens rarely, though, some quarter right now, because this is quarterly, as you can see this, right? Quarter 1, quarter 2, quarter 3, quarter 4. They publish it quarterly. So see this in financial year 2024, right? 2024 this data. In the third quarter you had this G is 0, above 0 is plus obviously. In the third quarter you see little surplus, isn't it, in particular quarter. Whenever it happens, you see every newspaper will be there, we have a current account surplus. So sometimes it happens a minor current account surplus for certain reason, but if you see combinedly this all quarter together, obviously you have a minus. So quarterly is not important. It doesn't matter. You see in the newspaper, suppose now we have a study to the CAD, and someday in the Hindu or in the next page you see that the news is there. Okay, in this quarter India got CAD. You start making notes. No, quarterly it keep happening. Every day activities are there. Leave that. Year on year is important. If some year you got current account surplus, not CAD but CAS, that is big for India. Because in the last 20 years it happens only once. That is also only 0.9%. You can see that. So there's a minor one that never happened in the last 17 or 20 years, you can see. All right, come to the capital account, and we'll extend this from here tomorrow. That will be leading to the next topic. Capital account. What is capital account? First, obviously, it is for the longer durations investment are there. In current account, the durations were also lesser, the minor everyday taking places. But in this, as you can see, the most all loans are mostly right. Now, even these are FDI, FII that we are going to study first itself. But these are also the investment. So it's a longer duration investment. The capital account itself is the long investments are taking are going in the in our outcome. So the tools we will see, number one, FDI, right? So we'll go to the FDI first. What is it? What do you understand by FDI? Foreign direct investment. You people tell me if you know something. What do you understand by FDI?
So what is the percentage of investment more than 10% from the foreign investment is called as foreign direct investment. If it is less than 10%, it is called institutional investment.
Anything else? Okay, yes, that is also very important point to understand. Look, there could be you are correct in the definition. That definition actually, do you know one thing about it? The definition, if they ask you what is FDI in India, even Indian government was not clear about it, right? Okay, what is FDI? So when government itself did not have a proper definition, how can we have it? So we are there was confusion in this. The one is that first we talk about little older definition. The definition that you said, that is the definition of the OECD. OECD has given this definition. Then in India, to have a proper definition, Arvind Mayaram committee was formed, and this Arvind Mayaram committee said that just to decrease his job, he said the OECD definition is correct, accept that. So we accepted the OECD definition and we are following this 10%. But even in that 10%, there is a catch. We'll come to that. But before 10%, as you were saying about this product, that is different. So there are 2-3 things in this FDI. Number one, first talk about that. Before we come here, look, there are 2 things we talk about. One is listed companies, right? Now, companies, and another is unlisted company, right? Now, when you talk about this, listed company means the company that is listed in the stock exchange, and unlisted obviously means that is not listed. Means there are the startups or new companies, they are not listed in the stock exchange. So these are the companies. So suppose, look, FDI, if I ask you primarily where they invest more, primarily, mainly, the investment in which? Answer will be 1 or 2. This is 1. I am taking unlisted 1 and the listed 2. So primarily where FDI invest? Unlisted, not listed. That is very important to understand. The primarily, remember one thing, I'll explain you to understand. Primarily, FDI is in unlisted companies. Is in unlisted companies. We'll come to the listed later. Now, it might sound little awkward. How it is unlisted companies, newer companies, FDI investment are coming. So look, FDI is 2 types. It's not only money that is coming. Suppose earlier definition that I'm talking about, until unless this OECD or Arvind Mayaram committee was not accepted in the country. So the definition was the physical presence and the money coming definition. Physical presence means that, suppose when you see some foreign restaurant in your country, Domino's, McDonald's or Pizza Hut, whatever that you see, or foreign clothes brands, Levi's, Adidas, whatever you see. So they are physically present here. In this country, you see, they have the outlet. So you can see them. Right. They have invested in your country, now their physical presence are there. So when they are coming in this country, establishing, they are not necessarily they are enrolling themselves or listing themselves in the stock exchange, right? So one thing, they are coming in your country and establishing their own outlet. The physical presence are there. So if any foreign company, the older definitions was when the foreign companies, whatever foreign companies are, They are coming, establishing their outlet here, physical presence, and then generating profit. Obviously, when they generate profit, they will certainly send some money out of it. That will talk. That is why balance, how much money is going out, how much money is staying here. So that was considered as a FDI in country, physical presence. And if they are sending money only, right? No, means they are investing some money in Reliance, right? They are investing some money in other. That was FPI, foreign portfolio. So physical presence means presence of your country, or they are investing in some of the companies. That was mainly considered. So one thing, unlisted company means you understood, I hope so. The country that is not listed, we have understood physical presence. New presence rule says that if it is listed company, the second one, primarily they invest in the unlisted company, but the second rule says if it is listed, right? If it is listed companies, then minimum investment should be more than 10%. Should be more than 10% in the company. So remember one thing, this 10% talking about only listed company, not in unlisted company, right? So that one catch need to be there. More than 10% investment in the company, then it is FDI. Done? So now suppose for example, Walmart FDI, we'll be coming to that types of FDI into that, but take that example here itself. We'll talk about there again. Walmart, the Flipkart as we talked about, Flipkart is no more Flipkart now. That you see Flipkart. Almost 80% of the share, 79.3%, almost 80% share of this they have, Walmart has bought it, right? So 80% means entire company, you can say almost. Walmart, always wanted to. Walmart is the biggest retail chain in the whole world. Walmart company, like there is several research on the company Coca-Cola. Coca-Cola entered whichever country, they destroy entire market. Similarly of the Walmart, wherever they go, they take entire market of it. The competition, they just first make the competitor out, and then they utilize it. India is the biggest market, consumer market in the whole world. Walmart wanted to come India, long back. Still, Walmart is not here. You don't see Walmart, right? Walmart is not there. There is a reason for that. Our FDI rules are a bit different. Walmart said, and look, where there is actually class. The one point that you can easily understand, Walmart was saying that, look, what Indian government point was that if you are coming here, if you want to sell potato chips, right, you sell it, don't worry, but potato you have to buy from our country. You buy potato from here. Means raw material you take it, then you make it, you can sell it, right? No issue. Walmart was saying, no, I will buy the potato from the place where it is cheapest in the whole world, and that is easy for them. Like you can buy from Delhi, similarly they can buy from any country. And then obviously when they buy, then obviously Indian companies will not be able to. Indian government said no, we cannot allow that, right? Because that will disturb it. So they did not came. So they came indirectly via Flipkart. Flipkart is also selling now. Flipkart Minutes here also are there. You see they are selling their own product, right? So this actually Walmart is saying now indirectly. And wherever Flipkart Minute is just 1 year old, not even 1 year. In the beginning, no one were able to compete with Flipkart Minute. Means, when they came, at a such cheaper rate and such quality product they were producing. Right now, I don't see that, but in the beginning, right? Even the minor product you are buying, even vegetable, anything, the day-to-day life that is used, you buy it, you see the quality difference in other places, even better than the market, and the price will be much cheaper because of the Walmart. So point what we are seeing is when they buy more than 10%, they bought it, that is the FDI. But if there will be less than 10%, that would be FPI, right? So because before we come FPI, I hope this should be clear. The 1 and 2, the listed and unlisted company. Anything more that you'd like to add in the FDI? What could be the FDI? If anything need to be added into it. Suppose, look, FDI investment that is coming in your country. Each FDI is kind of debt. If FDI investment is in the, even Indian companies, they do that. More than 10%, they buy the share of Indian company, they become FDI, right? Even the Flipkart or Reliance or any other company, if they buy more than 10% share in the listed company, that is FDI. Less than 10%, that remain FDI. So each FDI debt or FDI is an investment. Investments, FDI is not a debt at all, right? Is not a debt, because sometimes it might be confusing. Investment is coming, it is coming in the form of debt, or it is just coming in the form of investment. Anything else that okay, tell me one thing. If FDI is coming, that is coming with capital, that is coming with technology, right? That is coming with the manpower, right? Isn't it? Because investment, either if they are doing only with the money, like they bought 80%, the capital key. So it brings capital, obviously, right? It also brings technology, because sometimes tech can be there. If you know there's McDonald or on their own patent, they know how they are, and they are also bringing the capital, technology, and the manpower, right? Means innovations also they come with that by the technology. But when we will talk about the FPI, foreign portfolio, that I'll be coming now. FDI is clear, I think so. That is definition of FDI. Types of FDI will be coming. But before that, we talk a little bit about foreign portfolio investment. This is also called FII. FPI means portfolio investment, II means institutional investment, both are same. Earlier we had only one name, FII, foreign institutional investment, but now we call it FPI, portfolio investment. So how it is different than the FDI? One is, as you people said, that less than 10% in a listed company, not just plain less than 10%. So less than 10% in listed company, right? Is it debt or is it an investment? You people tell me. It is investment. So that doesn't matter, right? No. If it is less than 10%, how it is the debt? Debt will be only when you will be giving money and taking back. Investment means buying share. That is the meaning of investment. Yes. हाँ volatile होता है. हाँ बिल्कुल होता है. That is what I am asking you, na. It is only a debt or it is a investment only, or it can be combination of both. That is why I am asking you. It is debt or only investment. Like how? कैसे? Portfolio investment means some portfolio you are buying shares. If you are buying shares, then how it is a debt?
Sir, portfolio means diversification of funds. They go by breakdown of funds.
ठीक है.
So few part can be direct investment, like investment. Some amount can be given as a loan.
No, look. Loan, we have talked about different bonds. We have finished it already, right? In this, when you are buying less than 10%, what is the meaning of less than 10% in a listed company? What is the meaning of that? Less than 10% means 1%, 2%, 3%. So someone has taken 1% of Reliance. What does it mean? What does it mean? It means they bought 1% share. That is the meaning. It is not a debt, right? It is also buying share itself. Coming to your point, why which is more volatile, right? That is the point. When we make a table of FDI, FII, we can talk about it. FDI is more volatile or FPI is more volatile? FPI is more volatile. Why it is volatile? Because remember, then go through the older definitions first, right? That is the physical presence. If you have a physical presence, suppose they want to shut down the McDonald's, they will take time, right? So in a way, if there is a physical presence of this, because that is FDI, in FPI you don't have a, look, we talked about now in FDI, capital, technology plus manpower, all are coming, innovation are coming. In FPI, only capital is coming, right? Because they are not coming establishing factory, only capital is coming, they are less than 10 power. So if there is only capital, and suppose if some companies are not giving them that much profit, then they will sell the share and switch to the other country. That's why it is volatile. So under FTI is less volatile, right? Less volatile, and it is more volatile because of that. FPI is more volatile. You can make a table at your house differently, because I don't think that I have taken it. Otherwise, I'll put that in your what is called in your PPT. Don't worry about it, or the document. Now you will get the document. C is preparing your document. You will get it from today onwards. So make a separate topic. One side FDI, one side FPI. 4 or 5 points on that will do the job, right? Though I will try to put in your handout also. So one thing, it is less volatile. Why it is less volatile? As the one thing, the physical presence. Physical presence is not very easy to just shut it down and go there. Another thing, even if you talk in terms of investment, there are the larger investment, right? No. Suppose if now Walmart want to sell entire 80%, it will be difficult for them to sell entire 80%. Though Flipkart is a very profitable. Look, if they want to sell entire 80%, why they want to sell entire 80%? Because they think Flipkart is not working well. And if any company is not working well, then who will buy 80%? No, think about it. If they are making profit, then they will not sell it at first. They want to sell because they are not making profit. It means less profit is there, who will buy 80%. 1-2% people can buy in future, but 80% is large. So in both cases, either physical presence or the larger investment stop them to be become very volatile. They cannot just easily exist. FPI can easily be exist. They can exist from the exit from the country, because if they see that, okay, I have invested this much money but not making that much profit, sell the share, make some loss, don't worry, invest in another country. So they just do that. That's why it is more volatile, right? It is volatile in nature. And when we will study the capital flight, we'll also understood that. Difference between FDI, if I had done. Now we'll see some different types of FDI, different types. Types in the sense, look, one is the, first let me write types of FDI. One is greenfield investment. Greenfield investment. As the name suggests, what is the meaning of greenfield investment? Can you people tell me? Environmental friendly, because of the word green. New. Yes, very good. Yes. Wherever, it's not only investment, wherever you see greenfield project, similar, either in the infrastructure, wherever greenfield means starting from scratch, as you said right now, in the new project, right? FDI, first is the greenfield investment, right? The greenfield means starting from scratch, coming from there already, that is the types, means starting from the scratch, you can see that is starting from scratch. That is the greenfield. That is the types of, means they come, they start the first time they do that. That is greenfield, right? The investment. Second is the brownfield investment. Brownfield investment. Again, what is the meaning of brownfield investment here? That is already existing, right? Already existing when they buy some shares in the already existing companies, intermediary companies, right? So suppose when the investment in already existing companies, example is, best example I have already told you, Flipkart, Walmart, Flipkart, right? That is the best example. Starting from scratch means obviously they are coming new project, they are putting here, right? Suppose some foreign company is coming, putting new project, that is greenfield investment. They are entirely coming here. Brownfield means existing company, Walmart did not came here, they do this partnership with them and started it, right? Third is joint venture. What is joint venture? Very good example, yes. In the Maruti Suzuki, then all, if you are getting it, then also tell me difference between brownfield and joint venture. Because that looks similar now, yes. Yeah, yes, very good, yes, true. They started entirely new company, isn't it, right? In this case, there is not new company. Flipkart is Flipkart, they bought the share. But in this joint venture, the two company A and company B coming together and form a company C. That is the meaning, right? One company is, as you said, Maruti Suzuki. Maruti was India, Suzuki was Japan, they become Maruti Suzuki. That was entirely new company, right? So is Maruti Suzuki is not an older company of Maruti. It is not Suzuki itself. Maruti Suzuki is a new company. So though two are coming forming together, Hero Honda was there, right? Now why I say why is because now they are not together. I think Hero was Indian and the Honda was Japanese itself. So become Hero Honda, right? So now they again separated. So these are the example of it. That is the joint venture. A difference between these two only in this, that the existing company they go. Okay. Next thing in this, in FDI, one more, that is the root of FDI. Root of FDI. One is automatic route, and one is government, right? So automatic simply means, इसमें एक current news है, there is one current news in that also, right? I have not taken a screenshot of that, I'll put it tomorrow, but there is very current news, very few months back itself. Automatic route, what is the meaning of automatic route? You tell me, you people tell me if you understood route of automatic route. As the name suggests, look, without approval of the government, right? So it means automatic simply means without approval of the government. Approval of Government of India. And under government route, obviously, required the approval of government, prior approval of government, approval of government. Tell me one thing, that where do you think that right now, suppose if 100 rupees coming in India through FDI, where is the maximum investment, under automatic or the government? Automatic, almost 90%, right? So almost, you can say almost 90%, even more, 90% and more are automatic. It has levelized. Before 1991, we had a very less, even negligible. Then gradually, right now, what is news in this? I will come to this government route. That very currently, that in insurance, right, there is 100%. Earlier it was 74%. That list I will give you tomorrow, or I'll put that. In that only, look, like for example, look, we have several goods and services in the country, right, in which FDI are coming. Several goods and services, and hundreds of products are there, in which some are in government, some are in automatic. That there are something is combined, means particular certain percentage government, after that it is automatic, right? Then how much investment you can do? Do you need to remember all? The answer is obviously not, you cannot remember all, but few that is in the currently news that you need to remember. For example, the very currently it was in the news that in insurance sector in the country, earlier it was 74% allowed, only 74% investment in FDI. 74% means only if your insurance companies are there and they are taking the investment. Suppose Flipkart take 80% investment, that was allowed there. But if your insurance company, you cannot have 80% earlier, because maximum limit itself is 74% FDI. So you cannot have, though nobody can come and buy 80% share of the Indian insurance company. Are you getting that? Because limit itself was 74%. So now government has allowed 100%, right? Recently, you can say that is the current news. Recently, government has allowed 100% automatic FDI in insurance, right? ये पहले कितना था? Earlier it was 74%, now it is 100%. So it has improved from 74 to 100. So suppose if they ask you what is the FDI in insurance, now it is 100. So whatever is new, that you need to remember. Sector specific you need to remember. Then some data. Yeah, I have a question. Net FDI. Okay, gross. Look, there are several things where 100% FDI are there. If they want, they can do, right? You can say the net is there because entire company itself is sold to them. 100% if they take it, that is there. So, but you are allowed to do that or not? That was the question. Right now you are allowed. Yeah, under this, that all under government route, there are one thing to be understood. Look, your neighbor countries, right? How many neighbor countries we have it? Neighbor means bordering country, not neighbor. Neighbor is not a right word. Bordering countries. So how many bordering countries you have? India's border touches how many countries? 7. Don't forget Afghanistan, right? So we have 7 countries, right, that borders India. For that 7 countries, that is mandatory government route only. They cannot come through the automatic route. So that is one. It means that they are not allowed to come under automatic route. So bordering country has to be now. Bordering country is compelled, or you can say it is mandatory for the mandatory government route. That is also one thing. Yeah, that need to be understood. Then some. I think this year it is not important. 2 years back, World Investment Report 2023 was there. How much money is coming in the FDI and all, but I think India is becoming one of the large FDI destination right now. Can you people tell me why? Means why India is the attractive FDI destination? Tell me the reasons. Reason for India to be attractive. FDI destination. Yeah, you said first. You people say cheap labor. Right, labor is available at a lower cost. That's why they are coming here. So that is about the physical presence. Okay, fine. You can say labor availability, right? What? subsidized rates. Means, look, suppose if a company is coming in your country, okay, fine, land is given, then that part we'll talk about, is FDI good or bad. That is also a discussion question. We'll see only 2-3 points we are taking, because this will be in your mind. I want to cover the questions from both point of view. Suppose reason point of view and fact point of view. Fact we have understood right now. Suppose if they put one options in that, because I have seen it when we are solving questions, wherever there are little concept, then they are taking time. So that should not be the case. So suppose if they put the regions benefit, the benefit also we talk, there are some flaws of also in this. If the labor they are coming here, what they will do with that labor? India is the biggest consumer market also. Maximum people are there, na? They are investing, so it's the biggest consumer market. The larger, you can say largest, or not largest, but larger consumer market. So because consumer is too much here, right? So even if they are coming physically, they will, their product will be bought a lot. Even they are investing in some of the companies, their company product will be bought a lot. So that is the one thing. Labor is available. Give me some more point. What government is promising, that what we are doing. Government policies, liberalized government policy, that okay, 100%, that can be said, because even right now we took the example of this 74 to 100%. Even in defense, 100%, you people might be knowing or not. That was earlier. It's not new news. That's why I'm not giving you. In defense, we have 100% FTA, right? Earlier, it's a very old news now. That's why I'm not giving you that example. But that is also there. So liberalized government policy, correct? Liberalized government policy. Anything else? Incentive means if you are coming in your country, I'll give you something, right? Like Make in India schemes, different government schemes. Yes, that is also true, right? Like for example, they asked them, the Apple company makers, iPhones, if you are making here, that was also one tussle between India and US, right? They're asking that if you are making product here, larger number, but that they said such large that only the incentive will be given to you. That is somehow, you can say not very motivating to them. That if you make this much amount, they fix number of production also. That if you want to get incentive, then you have to produce this much amount here itself. That is also the case. So that's why that is not getting success. Government is true in their own way. Government is correct, because if they will be giving you some incentive, then that is also liberalized government policy, schemes of the government, etc., etc. You can say that. Anything else that you want to see? Why? What India is doing? Try to edit. Some basics, if I talk about, among the larger consumer, if you see the larger consumer part, apart from India, which are the countries? China is there, Brazil are there, South Africa is there, and US itself is there. Tariffs, lower tariff. India is not putting that much lower tariff. India is one of the heavy tariff of the country. Tariff will be starting tomorrow, for sure. First part, because that is actually, tariff I'll be taking it for sure. Trade I'll be taking it for sure, because that is the very important topic, and then we'll move to the fiscal policy. So tomorrow, 3 things has to be done, right? One is this dollar, etc. thing, exchange, how this capital flight, this will lead to the capital flight. So we'll talk about that, FTI first, then we'll talk about the tariff, trade barriers, etc. Then the trade we talk about. These things will finish. Then I'll see if time next, then talk about some partnership also, like the BOT, BOT kind of things also, build, operate, transfer, government inside the country as well. These things we'll do, and then we'll do fiscal policy. So though that is different, look, what I was trying to connect is that if you have a larger consumer market, who are larger, why they will come just because of that. This larger consumer market is from other countries also. So there are a few other countries also, they are there. But one thing that making India is a bit different from, especially in Chinese and all that India is one of the English speaking country, right? You have to understand, yeah, that's true, that is one of the reason. In China or other countries, those countries where newly developing, they don't have English proficiency as much as India has, right? So that also attracting the foreign countries to come here to communicate. Outsourcing, as you were earlier saying, that's why they are doing it. They are setting call centers here in India, and then they are solving the problem in the US. So that is also. So English proficiency is also the point. There are reasons, I'll put few, just I wanted to this. Now we'll talk about the best or the bad part. Is FDI good? The benefit of FDI first, then the advantage and disadvantage. What are the benefits? Number 1 to 3. Okay. Money supply will increase. So money supply will always lead to the growth or some. It can lead to inflation also, na? You are seeing economic growth. How it will lead to the economic growth? Obviously, it will be economic growth. They will invest.
They come with better, they'll hire.
Hire people, yes, good, correct. Yes. Cycle chain will be there because they are setting factory. All right, it will lead to the production. Fine. Before that, I want to add one point that is called the saving investment gap. Right now, because in our country, look, because GDP we have not studied it. Otherwise, I would have done that. What is called this chain or there itself, the growth cycle that is called. So when you have this growth cycle that goes right in this growth cycle, if suppose this is you when the money is coming to you, until unless you don't save in the bank, and we have studied in the bank if the money is coming. So savings should be in the bank to invest, right? Because if the bank will get the money, then bank will give the money to the companies, then they will invest. But because in India our saving rate is low, right? We don't have too much saving. So when you have saving less, that will lead to the less investment, and if there is less investment, then less production, less growth. So suppose if this gap is fulfilled by others, you don't have saving, that's why investment is not taking place. Investment is coming from outside, right? So that is being filled. Investment will be there, someone else is giving you the money. That was the advantage. The biggest advantage that actually, right? It is the saving investment gap. It reduces, better word to write, it reduces saving investment gap. You cannot say eliminate, obviously it's not eliminating, so still the gap is there, but at least helping is to grow. Or then obviously you can say it leads to higher production, that will higher production. Anything else? Very good, right? That is also the point, because it is leading to the capital, technology as well as the manpower. So you get the innovations of them as well. You have learned a lot of things actually. That also make, these things are common sense, you can use it, so I am not letting, because look, before this FDI liberalization, LPG, before LPG you get a topic I will not be taking, because it's a mainly theoretical topic, right, of those entirely industrial development policies. That is also mentioned in the main syllabus. Industrial policies of India, like 1991, before 1991, the second phase of that, first industrial revolution, second industrial revolution, how this entire revolution took place. In prelims, they don't ask these questions, right? It's a main centric topic. But that reminded, as you said it, when we did not have liberalization, we were not allowing foreign countries, we were partially closed. All, even in the whole world, these color TV, television, etc. were there. In India, one black and white television of Philips that was being sold with a very hefty price. And just after liberalization, these Japanese and all, they came with a bigger television and at a lower price. Then India compelled to produce it. Either you learn or you will be out of the market, right? So that also helped. You are right. The innovation comes that makes market competitive. If the market is getting competitive, the obviously consumer finally get benefited out of it. That is true. I am leaving this now. Few things we talk about disadvantage. How it is not good. Monopoly. Okay, yes, like Google, they are doing it right now.
Sir, it can sometimes affect the sovereignty of the nation.
It can?
Sovereignty of the nation.
Oh wow, yeah, that's correct. That's correct. But there is, though it is correct in a way, it can challenge sovereignty. But what happens? It's a very debatable topic actually in the whole world. Okay, look, that reminded me in your polity. We study now that is in the preamble also. We are sovereign. So the sovereign word is there, right? So when you say we the people of India, right? Sovereign socialist. When you say that, suppose in economy itself, when you study this World Bank WTO norms, you have to follow, you are compelled to follow. You cannot give more subsidy, etc. So that contradicts with the sovereignty, isn't it? That can be challenged. That if you call it sovereignty, simply means what? You will make the law for yourself, right? All the laws that we made by you are making by the people. So you are making laws for us, by the people of the India who is putting their representative. They are making law. It means you are making law for yourself. That is the basic definition of sovereignty. Now, if you are compelled to follow the WTO norms, right, then you can say our sovereignty is compromised, right? But then the question comes, okay, why you are following this? Who made the laws of WTO itself? The members of countries, and you are also the member of the country. So that does not compromise your sovereignty. Are you getting the point or not? So these term and condition, when you say you, WTO imposing laws on you, it's not you are the also member of it, and then you are the part of making laws, right? So your sovereignty is not compromised in a way. So that's why it is debatable. When you say this is the point. The logic is there because they will come, they will try to dictate. But when they come, the agreement is signed by these two parties. This is true if some company become too dominant. If they become too dominant, like this Google, they can challenge of the government. Facebook, they challenge of the government. That's true. Look, land that we were discussing earlier, the points I'll give you in detail, just 3 points. What are the disadvantages? They come here. Earlier, the advantages that we talked about, this resource utilization they do. But think about the resource utilization. We are not able to achieve our potential. Civic investment gap, they are doing it, they are coming here. You are not able to utilize your potential GDP because you are not capable enough to do that. They are taking your resources, making money and sending to their country. They are not coming here to make India proud. They are coming here to utilize your resources. The maximum profit is going to their country. They are just giving you rent kind of, or taxes. Only you are only getting that taxes, rent. If they are coming physically, then they are giving you employment also, right? But only if they are doing investment, like in Flipkart they did that. They are doing investment, then they are utilizing the resources. Mostly the domestic companies are getting affected out of it. Domestic companies are getting affected a lot because these domestic companies are not able to compete with them, right? Do you see any mobile phone of the Indian mobile phone? Even these potato chips, you don't have any local brand. Haldiram is there, but still nobody buy that, right? So you can notice it. Even minor things, if you start noticing, you'll see the Indian are not there, right? No, the Indian product is missing from every places. You don't make money. So that is, they are coming, they are making their own brand and good. This is the FDI. Now we will go back a little bit. This is something done. Now we have it. FDI, FII, we have almost done something. The list I will give you into that, and if I find some current, though current was only one was important according to me, but if I find that, come to the loan. Sovereign and ECB, external commerce. ECB means external commercial borrowing. So ECB means is external commercial borrowing, that is ECB. Sovereign. Here loan simply means what? Loan that India takes from other country. That loan is taken by the government, that is sovereign loan, and by the commercial entities, right? They both. And obviously we also give loan to other countries. So India also give loan, India also takes loan. And then we make balance that we talk about, which we are taking higher loan. Obviously we are one of the heaviest loan taker country. The international organization, you people have studied it, international World Bank, IFC, right now. So which organization of World Bank? The World Bank has 5 wings. Which of these wings, they are in the 5, who gives loan to the poor countries of the world? The poorest countries for the longer duration, right? They have like MIGA is there, IDA is there, IFC is there, and World Bank is there. World Bank is just one part of this IBRD, 5 wings. MIGA, IDA, IFC have already given, that is IDA, right? That gives highest, their job is, obviously that's why they have different organization. They give loan to the poorest and poor countries, and generally poor country for the longer period. Longer period means their loan can be 30 year, 40 year, and very low interest rate, right? By definition. But if you go through their data, who took the highest maximum loan most of the time? India is there, right? And why they give? India takes, that's fine. Why they give? Because the definition is that. Then you try to link with the poverty index and hunger index. When you link that in the hunger index, then you see India is 100th, right? And out of just 115 to 170 countries, 101 was the last year. So that fulfill their condition also, that they consider India as a poor country because you are 100 in the hunger index. So that fulfill the criteria, and then they give the India because India return the money. India is good in that. India never keep the money of any organization. So that's why. What point is that loan that is coming, India is taking lots of loan, right? Indeed, government, by the government means that could be the World Bank, World Bank, that could be the IMF, that could be the IDA, etc. From all this that India takes. India also give loan like Bangladesh, Nepal, Sri Lanka. India gives them loan, and then right. ECB, external commercial borrowing. Who are those? The firms, commercial borrowing they take. We have already talked about who is the highest borrower. That the commercial borrowing is that. Why it is good? ECB is the good thing. Means it's a very good. Why? Because the dollar comes in our country, right? When you borrow from other country, the dollars come in your country, so your forex reserve get little higher. Next, done is there is nothing more required in this. Coming to the last, NRI account. Look, NRI account is mainly 3. One is FCNR, foreign currency non-residence account. The first is written itself. Second is NRE account, right? and third is NRO. NRO. Right. First, we'll deal with the FCNR, foreign currency non-resident account. Can you people tell me what is this foreign currency non-resident account? You are explaining the name that is written here, right? In non-residents के पास होगी इसीलिए. That is true. Look, इसमें तीनों में that is NRE means non-residents external, NRO means non-residents ordinary. So if you want to full form the non-residents, it's clear to E for external, right? Non-residents external account, non-residents ordinary account. This is ordinary. I will come to this little later. Just first try to understand this. FCNR, foreign currency non-resident. What makes this difference from this? This is a fixed account by the non-residents of the country. Fixed deposit, remember. So this is the fixed deposit account, right? Fixed deposit. Means this is not a saving bank account. Okay, it's not that they can put and withdraw the money. Fixed deposit account in this, and that fixed tenure is 1 to 5 years, right? Means minimum, maximum 5 years they can put. Second, it is the tax-free. Tax-free, why it is tax-free? Tax-free in the sense, if they are putting here money, obviously they will generate interest out of it. The government does not expect. Why government do not take tax? Because dollar is coming. In all, whenever see they are not taking tax because they want dollar. So that is the reason it is tax-free. It is repartyable. Repartyable means that they can withdraw, they can take entire money, both principal amount as well as the interest amount in dollar to their country. It means it is fully repartyable, right? Fully repartyable means after the 10 year, obviously, they can take entire money in dollar into their house, right? Principal as well as interest. Coming to this NRE and NRO account, non-residence external and ordinary. Look, this NRI can be two types, right? What can be two types? One is that who, suppose take a hypothetical number. Suppose this is you. We also call, some people call NRI as non-returning Indian, right? One could be returning, one could not be. Suppose you went to the US, but when you decide to go US, in India, suppose this is the India, from here you are going to US. In India, you have several properties. You might have that, right? You have your land, you have some businesses, for example, right? You have some house. So all property was there. And in India, in the State Bank of India, you had one account in which you open an account. Obviously, now you switch to the US. You went there, right? But the house that you have in India, the businesses that you have, that is still earning money. You become NRI. 1 year you stay there, you become NRI. But the money that is being generated from India itself, that is going to your SBI account. But because you are not a resident now in India, you become NRI, right? But money is coming in this. So this is NRO, non-residence ordinary account. It means this is the Indian who is not residing in India, right? But in this amount, okay, you people first understood it, then I'll ask you the question. Then tell me that in which currency the money will be coming in. Which currency? Rupees only, right? This, because they are Indian rupee. If it means in this, the definition was that Indian who is living outside, their income generation from the Indian property. That is the definition. Income generation from Indian property or whatever the businesses was there. That is, and what is happening with the money means deposit in which currency? Deposit in rupee, and withdraw in which currency? That is also rupee, right? Rupee will be there. Second thing, look, this is in this, if you are putting, the tax will be taken from you or not? The answer is yes, it is taxable, like income tax. Just like income tax, if you, whatever bracket you have it, accordingly, how much income you have, income tax. It means the tax will be collected for you. Tax is collected, right? That is the one thing. Coming to the NRE, external account. Suppose you went to the US, right? Now in US you are earning some money. And SBI want that you are earning, don't open account in the Bank of America. You open another account here that you consider NRE account, right? Another account that will be named differently, NRE account. In this you put the money. Government of India wants you. Why first you will be putting money? Because as I told you, India paying higher interest. So they tell you that you put interest in this, you put. You agreed, but it is saving bank account, remember. It is not a fixed deposit account. So you will be putting money into this. So what you will be depositing into that? Dollar, right? But government, when you will be withdrawing in India, because account is in India, you can withdraw in rupee. So they will keep your dollar, remember, right? So the problem in this, the benefit for you that you will get higher interest, but the risk is exchange issues. If the rupee devaluate a lot, right, then you will be in the issue because you will be withdrawing rupee only. So that is the problem, right? It means in this NRE account, the deposit is in dollar, but withdrawal, right, is in rupees in India. Right? Later on, obviously, you can take exchange and then take the dollar entirely after that. Is it tax free or not? The answer is yes. It is also tax free. Means government do not take tax from it, right? It is fully repartiable. The answer is yes. You can take entire money, no problem. Government do not stop you. Why it is tax free? Again, to get the dollar. Why government try to make it more lucrative? So they get it. It is tax free. It is also fully repartiable. That's it. That is the NRI account. Look, all now this is done, right? All three: capital account, current account. Now I will be going back to the, because here it is not, so I will be going back to the first one, the starting of this. Did I took that or not? Entire one, yes, we have. Yeah, forex. Okay, forex we have not discussed, so talk about little bit about forex also. Tomorrow I will give you the content. What is forex? First, then I will come to this. What is forex? You people tell me. What do you understand by forex?
Foreign currency reserves.
Okay, yes. What else? Foreign currency reserve. That is definition of forex, right? What else? And gold, right? In the forex, when you say that, it is the not combination of only currency. That will be the forex, means foreign currency plus gold, and then the SDR, as you say that, special drawing right. So combination of all three. What is SDR? You people understood. Otherwise, it is IMF tools. IMF, when they give you the loan, they don't give you money directly. They give you SDR, and SDR is as valuable as, that is the basket of the currency. So this is that. So that is what is nothing more important. Remember that these four things, that is combination of the things, is forex, not only currency. That is the one thing to be remembered. And second thing, what is the situation of India, right? And what will be impact of this if forex is decreasing and increasing? That I will teach you tomorrow to try to relate with capital flight. Because if your forex will be lower, remember under balance of payment itself, when tomorrow we'll be studying capital flight, etc. Remember, we had a BOP crisis. When we had BOP crisis in 1991, right? It led to? What was the biggest issues that led to? Okay, that sometimes some terms coming in my mind. That is.
So basically, USSR has been integrated. Initially, we were having a trade with USSR in their stocks. The data they were not having dollars.
That was one of the bigger regions.
And the other one was gunpoint.
Yes, Middle East in mind. Yes. That's great. Obviously, because trust was okay. Fine. So we got the currency, but look, what was the one major reason also? Like we talked about earlier, the investment. They actually look what happens when you study all topic together. Then some connection comes. When, as we are talking about investment earlier, suppose money is coming in your country. Even you are borrowing, right? That will come under the debt to GDP ratio. When you study GDP, I'll try to take there if it is possible. That is called debt to GDP. GDP means total income of a country, right? So when you have a total income of the country, under the fiscal policy, you will also see that under fiscal policy, one income is also your borrowed income, right? Whatever you borrow, that will be the part of your income. Under the fiscal policy, we'll study that. Revenue income and capital income also. Under capital income, one is borrowings, right? How India has one of the highest borrower we talked about. When you borrow, right, a lot, obviously it can create, that is debt to GDP, means how much you borrow in your total income, how much is borrowing. So it sounds very bad, debt to GDP is a very bad thing, right? But if you see the developed nation, right, Japan, if you see the US, they have a 250%, India has still control, means their income is 100, borrowing is 250, then how they survive? So then theory comes that if you are borrowing the money, but of that borrowed money, you are not paying salaries and subsidies, etc. Borrowed money is put it in the infrastructure, right? That is creating the investment. So if you are doing that, then that borrowed money is actually helpful. That is how business runs. Business are borrowing the money. They are paying interest, but still they are paying 10% interest. They are making 50% profit. So that is helping. Why that reminded me? Look, in 1991, one term is that is called import cover. Import cover means all the forex reserve that you have, right? The forex reserve. that should be able to cover your import for next 14 days minimum, right? How many days you can cover? That is import cover. Import cover means when you importing something, you have to pay money, na? Free, you will not get free. You have to pay dollar, etc. Forex reserve you need to have. Suppose Russia is sending you the oil, or US is sending something. Russia will take the dollar, or US will take the dollar or your rupee. They will take the dollar. Even other countries, they will take the dollar, right? They will not take rupee. So it means you have to, vacate the forex reserve. So import cover is already asked question in UPSC. What is import cover? They just asked definition itself. Import cover means that only. Your import cost that you have, how long you are able to cover it. And then the rule says that minimum 3 months you need to have, that's better, right? 3 months should be there. If you more, that you have. BOP crisis was when it happens, our India's import cover was for just next 10 days when it will finish. Even, and second was the, look, one is the short-term borrowing, and other is the long-term debt. Long-term debt, that we have talked about, short-term debt, long-term debt. Short-term debt means less than 1 year debt, and long-term debt, obviously, it can be 20, 30 years. India's short-term debt was larger than India's total forex reserve, right? It means if you give entire forex reserve, still your short-term debt will be smaller. So these two is one bigger one. That's later because your forex reserve is gone, and short-term debt you have to pay it anyhow. They are there, so you have to give them. First thing, then you have to not have import cover, right? Then, that's why the Tata has the reputation from those time only. The Tata government did not know what to do. That was not a minor condition. Common people did not understand it, right? No. Then the newspaper were there. You see, there are several documentary. RBI has put their own documentary on this. How in the truck when the gold was going to the airport, nobody knows what is going. Truck in truck, the full of truck was going to the airport. They took that was Manmohan Singh was the I think RBI governor at that time, or finance minister, yeah. So he took this decision of that, putting the gold to the Bank of England and IMF also. So gold will be taken. That was going in a truck, and one journalist was having tea. He noticed something. What is happening? Where this truck are going? And nobody was giving the information. And people did not know it. The condition, anyways, technically what we required for that, these terms, the import cover you were lacking, you have to put the money out. That was the balance of payment crisis you had. So forex cover is needed. In this also, if you are lacking, from where the money will come. That is the forex you need to understand here itself. Coming to this now, the last thing we'll be putting. So look, we're coming back. When you have to call trade deficit, what is trade deficit? Only the visible items, right? Yes or no? Only goods. If you have to call current account deficit, what you put together? Visible and invisible. Both we have trade deficit and current account deficit, right? There is no point. We have a capital account surplus because you can see things. FDI, we are the one of the topper, right? We have a FPI, lot more investment. Loan, highest takers. In NRI, our NRI, the whole world. So in this, you can see everywhere money is coming, right now. So money is coming a lot. We have the capital account surplus. Combination of all when you do BOP, that becomes balance of payment, right? It means total current account plus capital account. Whatever total money is coming in your country, and then whatever is going back in your country, that becomes balance of payment. Now you will tell me, assuming this, do we have balance of payment surplus or balance of payment deficit right now? We have a surplus. Recently, we have a balance of payment surplus, right? We have a balance of payment surplus because of these booms, right? Lot of investment, lot of borrowings, we are doing it. So capital account is compensating the total BOP, we have a surplus, but main things means CAD and the trade deficit that we have. All right, that's it. I think I'll be leaving today, or should I continue a little bit more? Continue a little bit, yeah. Few things that will, no, just tomorrow's class will be continuing from there. Though that will be leading, there's a part of current affair itself, sorry, external sector itself. So look, few currency types as we have already started. So under external sector, some types of currency we discuss a little bit. One is the hard currency. One is the soft currency. And another is the hot currency. What is hard currency? What is soft currency? What is the hot currency?
So something is staying for shorter duration.
Something?
Shorter duration.
Okay.
Is hard currency.
Something shorter duration means? Okay, elaborate it. You are close.
For example, if I foreign portfolio investment, The investment is staying in the country for a short duration of time, so that can be called as hard.
Okay, fine. What about hard and soft? What is hard?
Anything that can be easily convertible to currency is hard. Liquidated easily.
You are very close to the correct one. Yes. Anybody else? You people can also participate, right? That will only awake you. Because what happens now, your subconscious mind say that I have to be correct. Generally, you find, doesn't matter it is correct, not correct, no. It's better to fail in the classroom than in the UPSC examination. It's always desirable, right? Because everybody will remember that. So don't worry about it, it's correct, not correct. You just participate. Because when you participate, then as a human being, you want to be correct. You want to say something that is that will keep you in the hunt. That will also that's the thing. Anyways. Look, here hard, as you are very close to that, here hard currency means it's not only convertible, but the currency that is widely acceptable in the whole world for the exchange. Means that the mostly, or you can say widely acceptable, right, widely acceptable for foreign transactions. Foreign transaction or export and import. Right, foreign transaction or export and import. For example, obviously for dollar, right? Dollar is your example. Euro, pound. So these are your examples. But petrol. Sorry, not getting. Petrodollar, right? Petrodollar. Okay, let me coming to one thing. One currency is what is the currency of Qatar? I think Qatar itself, yeah. Or even there is Abu Dhabi, right? And also Qatar, dinar is the currency, right? So if you see the exchange rate of India, right? Suppose dollar, the $1 is equivalent to how much? Approximately 90. That is going on. Pound will be, or euro around 100 are there, right? What about the dinar? The Kuwaiti dinar space. 200 something, 250 something is going on, right? So see, this dollar is just 90, Kuwaiti dinar is around 250 and all, but is Kuwaiti dinar the hard currency or not? That's the question. The answer is no. Why no? Because it is not widely accepted. So not only their value, exchange value is making them hard. Because suppose if you are visiting the even in Asian country, if you visit it, right, even though your our Asian countries all around you, Malaysia, Maldives, Singapore, they are taking dollar just like Indian rupee. You just go there, they will not even ask you. If you have dollar, even they accept. It's very happy, right? This dollar is running in the whole world like that. You don't even feel that if you have the dollar, don't even feel that you don't have currency. You don't need their currency also. In Asia, leave about the US and all. So point is, hard currency means that those currency who is widely acceptable in the foreign export import. What about the soft currency? Obviously opposite of it. Like example will be Indian rupee. One of the, though you can take other example, but Indian rupee is India is doing very great in that. We can talk about that also. Maybe I'll see something that internationalization of rupee, India is trying to do it, right? Trying to push Indian rupee, especially in the BRICS countries, they are trying to do. Even in G20, they are trying to do that, right now. So India trying to come in this also, but still it is not widely acceptable in the whole world. That is why it is all. Hot currency. What is the meaning of hot currency? As you said, look, any currency that is exiting your economy, right, so fast, and that has to be the hard currency, right? So any hard currency that is exiting the economy, right? So the best example is the FDI, sorry, not FDI, FPI, right? So look, suppose hard currency itself is a hard currency, but when hard currency become hot, when it is exiting the economy. So when the FPI investors, they are selling the shares here, or then they are leaving it, that is called the hot currency. But the question is why they leave. Why they leave? Because they get higher interest in other countries. When they see that this economy is about to collapse, right? They see that the economy is in trouble, right? For example, those earlier who has invested in Russia and the Ukraine, etc. When they see the war could happen, they will start exiting because they see future is not good. These are the reason, obviously, and mainly the interest rate. Tomorrow we will talk about capital flight because that is monetary policy impact in capital flight. That is a bit technical, so I want fresh mind for that. But something I am taking smaller things today. So FPI will be the best example. The hard currency itself become hot when exiting the country because mainly 2-3 reasons. Number one, if other country are paying them higher interest. So when they see that the higher interest means that higher profit they see. So when they see the higher profits are there, then they are selling the shares here, they are going there. That is the reason. Well, few more terms related to this only because rupee is depreciating right now. So we have a depreciation and devaluation. What is the difference between these two and what is the meaning? It has? No. Anybody else? Yeah, tell me. You want? Deliberate act. Yes, correct. Right now. So when the depreciation simply means if the any foreign means your currency is losing the value against foreign currency. That's the basic definition. When a currency means any country's currency, in India we talk about rupee, any currency value, for example, suppose rupee value, that is depreciating means going down, they are losing value against foreign currency. Any foreign currency we can take, that is the depreciation. Devaluation is the deliberate act, means that when RBI or central government of a country, they deliberately devalue your own currency against other foreign currency, right? Now the question, if you all got it now, right? Now tell me why any country will devaluate its own currency. If India is devaluating its currency, why they will do that, right? Because depreciation is good or bad? Before we come to the devaluation, is it good or bad? To make export cheaper, right? That's correct. Main that is the main reason. Then we'll talk about yeah. Go ahead, right? So look, devalue is a compelled thing, means not compelled, but a deliberate thing. They do as why they devaluate. Mostly China does that, right? India also devaluated few times in our in the past. They do mainly for that. If they do mainly for export promotion, right? Export promotion or to raise the export. That will lead to the our less C. How it will lead to the less export, means higher export? How export become cheaper with this if you devaluate it? Because in the foreign country, the price of our commodity will be less, isn't it? Then there will become more competitive. This was also a question, I think, in examination, that it will become competitive or less competitive. That was the line used right now. So if you devaluate your currency, then your commodity or the product will become more competitive in the world or less competitive in the world? More competitive, because the price will be cheaper right now. So price of your product will be cheaper, then everybody is getting it now, because 1-2% answer it, I think that everybody got. I'm going forward fast, so I hope you all are getting, right? Are you getting it? Yeah, all right. That is devaluation. Obviously opposite of it, no, appreciation and revaluation. So appreciation simply means that the automatic market based means what? Market based means what? What is the meaning of market based? Depreciation, I'm coming back again, or appreciation. Market based means what? Demand and supply of the dollar, right now. Recently, that is also recently our rupees is depreciating a lot. That actually it has started from the 1-2 year back itself, and then continuous decrease is there, right? The one common reason is demand and supply. That's obviously baat hai. Whenever the demand of any currency will be higher, their value will go up. Not only commodity, look, anything in the whole world, if their demand is high, the price or the value will be high. That's a simple logic. Anything, if the dollar is being demanded more, the value of demand is going, and oppositely it will impact the currency. So that is one reason. So now why the demand is more? Obviously that could be several reasons for that, because in the international demand we have seen the hard currency is there. But one thing is that supply could also be less, isn't it? Of that supply side, who is supplying this dollar? And whenever we talk about dollar, we are talking about the US dollar. Australia also has the dollar, so other country also has the dollar, but the US dollar we are talking about. The US dominate. So why supply side? So do you know, 2-3 years, they thought in 2008 only, but few years back, their Federal Reserve, their central bank, they started thinking that we need to supply less dollar, right, just to raise the value of it. So supply of dollar has reduced in the few 2-3 years back itself. Now impact is still coming. So another side, supply side as well. Demand side is there, but supply side, so dollar supply was also reducing in the last few years. That was another reason. Obviously, if you try to add other reasons also, the economy is also going down, under other countries losing faith in your currency, etc. Your domestic inflation could also be the reason. So these things will be there as well, but major things is there. Appreciation means market based, and the devaluation means that the deliberately you can. Now the question is that can they do it? Means can RBI or central bank devaluate its own currency? What WTO norm says on that? Can you? Suppose otherwise you can make 1 rupee is equal to $1. If India do that, then who will be in the loss? India itself, because our export will become such costly that nobody will buy. Even right now, the tariff was there, the situation was not that good, right? So can they do? The answer is no. WTO norms are there. Rules and regulations are also there. The WTO do not allow you to devaluate or reevaluate your currency as per your will. If you do that, then there are certain conditions need to be followed for sure. You cannot just devaluate your currency. But yeah, under certain circumstances, we are doing it. Then the capital flight, the impact on the monetary policy impact, we'll see tomorrow. Anything smaller thing that I can today, I'll leave that, right? Tomorrow we'll continue from here only, capital flights, etc. Then we'll talk about trade, different types of trade, and then after trade, I'll try to take the topic related to that itself, Indian inside some BOT, etc. External sector almost finished, only that part is written, means relationship of dollar, etc. That is left. Trade we'll talk for sure, types of trade agreement also, what are the different types of agreement, that we talk. Some questions also we'll be putting from today's class, right? And then we'll see from maybe if it finished first half itself, let's see. Then we'll start fiscal policy tomorrow, because 2 days you people have it, as much as we'll try to finish it off. Any question you people have, you can ask. Lot of look, exact that news is not coming in my mind, but if they do that, right? No, if they do any country, so what you are saying, they were here, right? And then they withdraw the money entirely today, means all of a sudden they did that. So that will lead to the capital flight. Capital flight obviously means that all the money of PI is going, that will lead to the hot money. And why they did that? What was the reason? Why they wanted? I'm not worried about that news, but why they did? They wanted to create some instability. Oh, that can be the case. Now that can be the case because look, remember, let me remind you one thing: forex reserve that we talked about, right? Forex we talked about, na? Which country has the highest forex reserve in the world? US. Suppose I give you the option US, right? And the UK, India, China. Which has the highest forex reserve? Why US need forex currency? Forex, why they need forex? Foreign currency. Their currency people take, right? They print the currency. They are not even top 20. Right? China is there, right? US is not anywhere because for others foreign currency, that is their own currency, right? So they don't need foreign currency. What reminded me your thing is that look, when the China trade war was going on, and then at that time this topic was also being talked in some places. China and India is on the second one. But remember that China's forex reserve is that huge, difference is that much, that if China wants, they can, I cannot use the word destroy, but you can say completely destabilize the US economy just by using their currency. How it is so is a basic thing. So China has dollar, forex in the forex reserve. Okay, that also reminded you one fact. I will come to this story again. What fact they'll also remember? India has forex reserve. In that we talked about in forex, there is a foreign currency, gold, SDR, all are there. Which has the highest proportion? That is the dollar, right? If they ask you that in forex reserve, which of the following has the highest proportion? The dollar is the highest proportion, means that the foreign currency. Then comes this dollar. Similarly, Chinese forex reserve, but they have highest dollar and huge quantity. Their forex reserve is more than the GDP of several nations. Remember that much forex reserve they have. Now, suppose if they put this dollar in US economy, right? They put it the dollar. What will happen to the value of the dollar? We're talking about a depreciation now. Their value will depreciate all of a sudden. The market can crash, right? They will also suffer with that. China will also suffer something. But if they agree, as you know, if you have such kind of enmity, you want to take revenge without going for the war, just economic war that they are doing, they can destabilize entire US economy with this only. Just putting their forex reserve, right? They also, if you are, when the war happened, you ready to die yourself also. Na? The consequences, if you are ready, then they can do that. So that is always the case. That is also the reason that openly they are not dare to fight with China. China is one of the most threat to the world, you have to understand. Maybe next superpower. Yes. Hmm.
That should tolerate depreciation. It should not tolerate devaluation. Because devaluation is regulated by the central banks of the
No, the devaluation, you did not say that. Yeah. You said devaluation. May have no, obviously, look, that will lead to, because when the look, if they will be taking dollar back up from our country, simple for us, in this country we have a dollar, we have a rupee. If they take dollar back, the dollar will be less. If anything less, their value will be high, right? Simple thing. So when the lot of people, as you said, in the example, they collectively think to take the money back. So obviously dollar is going back, or any foreign currency. So their value will rise. If their value is rise, automatically this value will go. So this is a very simple thing. That will depreciate the currency for sure. But RBI interventions are there. That we'll talk tomorrow later. Will monetary policy impact? What RBI can do if there are too much money is flying? All right. Chalo. That's all. You people got free today a little bit earlier, because I want you to do not mix the topics and revise it this today itself. Okay. Try to revise it. We'll try to solve questions from this topic also tomorrow. Some questions in the beginning itself, we'll try to solve some questions from this capital and the current account, etc., etc. Then we'll move to the capital.